So now we're going to look at I guess we could call it a slight evolvement to the strategy in terms of the way that we look at market structure. So hopefully if you have worked your way through the market structure module in chronological order, you would have seen so far that really we've just looked at, those two main types of structure, one being swing structure and one being internal structure, right? So swing structure, well, we get those larger, big swings in price, right, that lead to the swing break of structure. With the swing high and the swing low, we're calling that swing structure, okay? Nice and simple, right? And we can use pip rules if you want to do that, or use discretion in order to sort of classify what you deem to be significant enough of a pullback to deem that as swing structure. Okay, cool, nice and simple. Now, what we have called everything else, or the other pieces of structure that isn't swing structure, right? That isn't those big swing highs and swing lows in the market, we have simply just referred to everything in between that swing high and that swing low. All of this we just referred to as internal structure. Now, whilst that still remains to be true and still the way we will define that, we're just breaking up that internal structure now into two separate pieces of structure with two different names, okay? Just because it makes a lot more sense to do this, and you'll see why as we go through it, okay? So swing structure is exactly the same. Now that internal structure, we are now going to have two types, like I said. One we're still going to call internal, and one we're simply going to now refer to as fractal, okay? Now, I know it can get a bit frustrating where there's all these names and terminologies, but I think it's just really important that we try and have very clear and separate definitions, just so we don't kind of get confused, right, when we are referring to things, because, in the market, sometimes it can get all a little bit, one and the same. So I think it's just good that we try and make these definitions as clear and as separate as possible. Okay, so three types of structure: swing structure, which hopefully we should be very comfortable and familiar with. Everything that isn't swing structure, so everything basically in between the swing high and low, is internal structure, but we're now breaking those up into internal and fractal, okay? So what do I mean by that? Well, very simply, the internal structure we're now going to refer to is those slightly larger swings within the internal structure, okay? So obviously we have these big obvious swings in the market. We'll go through charts examples in a minute to really drive this home, but they're the big, what we call swing structure. But sometimes in between the swing high and the swing low, we can have those slightly larger pullbacks, right? These movements here. They're not quite big enough to be swing structure, but we can see there's large movements in that. But then within those larger swings, right, as we move down, we can have those tiny little pullbacks like that. So what we're trying to do here is basically separate out the difference between this here, what I'm circling, that which we're now calling fractal structure, so it's those very, very tiny movements, and then those larger internal swings. So that's kind of the purpose of this video. We're just separating those out, because before we were basically lumping in, if I get rid of all these orange lines, we were basically calling that pullback the same as that. We were basically referring to both of those as internal, which hopefully for obvious reasons, it's beneficial to separate these out, okay, in a nice and systematic way. So from now on, those larger internal swings, which is simply going to refer to as internal structure, and then these very, very small, tiny swings, we're going to refer to as fractal structure. Okay, so fractal structure, in terms of defining it on the chart, is going to be what we have so far used to look at mapping chalk, to look at mapping change of character. So you know how we have looked at whether or not the previous candle breaks, whether or not the candle breaks the previous candle's high or low, right? When we're looking at mapping change of character, hopefully you guys should be very familiar with that now. That is what we are now going to refer to as fractal structure, okay? And then those larger swings, that's what we're simply going to call those as internal. So hopefully that's clear, and it will become clearer as we go on to the actual charts. Okay, so looking at our basic price action model that we use to kind of go through and explain a theory, how are we now looking at this? Well, it's exactly the same, right? We're in a bullish market trend. We have a swing run to the upside. We then have what we deem to be a significantly sized pullback, right? So that's our swing pullback. We then break that swing high to the upside. So we have a boss. So that's a swing break of structure. So we take out that weak swing high to form that swing higher high. Once we have that swing break of structure, only then can we then look back for the lowest point that took out the swing high, right? After the swing high was created. That then we can now confirm is our swing high or low, okay? Hopefully you guys should be very, very familiar with this by now. If not, please make sure you go back through the content before moving on. Cool, so now we've had, So now we have had that swing break of structure. Okay, we then wait for another significantly sized pullback to know when that swing pullback has begun. But what can we look for to potentially give us an early signal that this move may be happening, that this swing run is over and that swing pullback may be about to commence? Well, the concept that you guys have learned so far in terms of market structure to signal that that swing run may be over and that swing pullback may be about to commence is change of character, right? What do we expect after a break of structure? We expect a swing pullback. How do we know when that swing pullback is going to commence? We look for a change of character. So that is now what we are talking about when we look at fractal structure. It's those tiny little, candlestick movements in price, where we're looking at, does the previous candle break the prior candle's high? Yes, yes, yes. Then suddenly it doesn't. The next candle fails to break the prior candle's high. So that's where we get that fractal pullback, right? So we get a little pullback in price. Then we move up and then we take that fractal low, okay? So previously I called that internal low, but with these kind of new lessons we're adding in now, we're going to try and refer to this as fractal structure, okay? So that's when we again get a bearish change of character. And that's our first little signal from a market structure perspective, right? That potentially something's changing, weakness is stepping in, and we may now potentially be getting a swing pullback, right? It's just one little confluence and one little signal. It is not a guarantee, okay? So in this instance, we come down and then we take out this low here. So this low is what we now call an internal low because it's, a larger internal pullback that we can see, but it's not like a significantly sized pullback. Because obviously in the market, right, markets aren't perfect. They don't move like line charts. We can get these big pullbacks like this, right? Then it can move up. It can have a bit of a pullback. And then it can have like those literally tiny little pauses like that, right? So this is the swing. That's the internal pullback. And that's the fractal pullback, okay? So once we get that fractal break, which is this bit here, that is our change of character. And that is our first signal that the swing pullback may be commencing, right? When we then break an internal low like this, that isn't quite significant enough to be swing structure, but that's another good bearish sign as well. It's a much more significant sign than just the change of character, right? Now, sometimes you won't get a little pullback like that, right? Sometimes that will just be, imagine that's just one perfectly straight line. And in that instance, yes, the internal break of structure, the IBOS here, will be the same as the CHOC in that instance, okay? They'll line up to the same place because the internal low and the fractal low are at the same area, okay? So sometimes that will happen. Right, but this will become clearer when we look at the charts. Right, so then we get our pullback, and now you can see, right, we get these larger internal swings. This is not swing structure, it's just the larger internal lower lows and lower highs within the overall bullish swing market, right? This is the swing higher low, the swing higher high. We are now having this pullback, okay? So this is all one time frame. That's all I want you to think about. This is just one time frame. Think of the M15 if that helps you. This is all we're looking at, it's one time frame, right? So these are the larger internal swings. We get that internal break of structure to the downside. We pull back, right? And it keeps going down. Now, this is kind of more realistic of what you'll see in the market where you'll get those little pullbacks, right? Where like the prior candle fails to break the prior candle's low. So we pull back and then we continue down, right? That's exactly what we were looking for marking our highs and lows for CHOC, okay? So what can then happen is we then get that bullish change of character to the upside as we break that fractal high. So what have we learned so far? Well, we've learned that when we have a swing pullback, right, and we pull back, ideally we come down into the discount of the range, etc., etc. We then look for what? We look for a bullish change of character to signal that potentially the swing pullback has now finished and potentially the higher low may now be forming, right? So now we can try and catch that next pro trend swing run to target the week high, okay? That's what we have been using change of character for. It's just one piece of confluence from a market structure perspective that we get that change of character, we break that fractal high, and now potentially, right, that move is going to happen. Now, the problem with this, not the problem, is that change of character is the most aggressive type of structure break, right? Because we're literally just looking at those little candle movements, right? So it's fractal structure because, imagine this is the M15 time frame. That tiny little pullback, that's basically an M1 or an M5 swing pullback, right? It's barely visible in the M15 a lot of the times. Sometimes it will be, but most of the time, right, it's just a little candle pullback. So that's why we're calling it fractal structure. So if price comes into a level that you like, obviously we haven't looked at supply and demand yet, but you guys know we'll be getting to that. And then we're waiting for market structure to shift in our direction to kind of confirm this level, right? We come into here, and then we look for our change of character. Cool, and then we would look for price to pull back and then try and catch that movement to go there. But what can happen, like I was saying, because change of character is very, very aggressive, it can give you those false signals. So you can think, okay, we've come into our discounted demand level. We've had that break of the fractal high to give us our bullish change of character. Okay, now we can assume that that swing high low may be forming, and now we can get long to target that high. But sometimes what can happen is it can be a trap and then price can continue down. Okay, I'm sure many of you who are already trading this way have experienced that before. So this is where bringing in the internal structure, looking at those slightly larger swings in price, is really going to help us. I know it seems very simple, but it makes a big, big difference when you start to introduce this into your trading. All right, because as you can see, if you follow the larger internal swings, which I'm now drawing with the orange line, right, we can see that although we got a bullish change of character, which is valid, right, where we break that fractal lower high to make a fractal higher high, if you look at the orange internal structure, right, it stays bearish, right? We never take out that high. So you can see the larger internal swings, we get that lower low, lower internal high, lower internal low, lower internal high, lower internal low, right? Lower internal high. So that's when we're trying to buy because of the chalk, but the internal structure never actually changes. Only the fractal structure changes. Okay, so hopefully you guys can see that subtle difference now. Again, it will become clearer when we look at the charts. So then what we can do is if we notice that we don't get that bullish IBOS and the larger internal structure stays bearish, right? That can potentially save us from taking an unnecessary loss within here, right? Or you might want to be aggressive, right? And keep shorting. These are the types of things you want to be thinking about. Now, again, we push down lower, potentially come into even more discounted demand, and then we get another change of character again, right, where we break that fractal high. So yes, you could look to get long within here, that's absolutely valid, but just be aware that potentially it could come into this level here, right, this current active internal lower high, and then it could stay bearish again, okay? But if I just get rid of that, once we then get that true internal break of structure, right? So those larger internal swings now puts a internal higher high in, right? Now we have a lot more confirmation because that larger internal structure has now shifted from bearish to bullish. So now the internal structure is truly aligned with the swing structure. Okay, so before what we were kind of saying, which is not obviously as clear cut as this, is before we were saying that once we get a change of character here, right, by looking at those little candle pullbacks, then we were basically saying that the internal structure is now bullish. But that's not really that accurate, right? It's when you get those larger internal swings like this and that then breaks, that's truly when you get a much more, a stronger signal that the internal structure is now aligned with the overall swing structure. And this is when you get those highest probability movements, because now we can wait for that pullback to catch the internal higher low, right? Which is now aligned with the swing structure. And now these trades become a lot more higher probability to go. Okay, so it's not to say that we can't look for, let's bring this back here. It's not to say at this point that when the internal structure is still bearish, right? This is the current active internal high and this is a low. It's not to say that if you come into a really nice level and we get that initial bullish change of character by breaking the fractal high, you definitely can take this trade, okay? You know, for you guys who obviously, advanced understand this, we can take this long in, especially if we're coming off the extreme. We expect this to be a strong low. This is a high probability area to do it, right? So we can get in long here, but we just have to accept that when price comes up to this point, that we may, if we're already long, we may want to take partial profits. You may want to. You don't have to, right? But just be thinking about how you want to incorporate this into your own trading, because the internal structure may stay bearish and then that could continue, okay? But once we get that IBOS, right, and the larger internal swing then breaks, and then the larger internal structure is then bullish, that's what I was saying, right? Now we are truly, truly aligned, and this is a much stronger signal now to look for the long within here, to catch that higher low, to now try and get that move, okay? So hopefully that makes sense. I've tried to go quite slow. I know for some of you it's very, very simple and it can seem a bit pedantic, but a lot of you will be going through this for the first time. So I want to try and make it as clear as possible, because I do appreciate, up until now, if you've gone through the market structure module, we've kind of looked at this not in a different way, but in a more simplistic way. Whereas this is a slight adjustment, but you'll see in a live market, especially when you start, trying to trade this live, this will make a very simple but big, big difference to your understanding and expectations of price and ultimately your results. Okay, when to be aggressive, how to manage your trades, when to wait for more confirmation, and just really understanding, why things may have failed and why they worked in some instances and why they didn't in other instances. Okay, so yeah, I'm trying to think if there's anything else I wanted to add to this, but hopefully that makes sense. Let's talk about, I guess, one last thing, weak structure and strong structure. So we know that essentially a strong low, right? So this low here, the reason why it's strong is because it achieved its job. It broke a high, right? So this is weak because that movement never broke any structure. But this becomes a strong low once it causes that break of structure. Okay, so we know that when price is pulling back, we expect the strong low to hold because it broke structure, right? We should know that. We should be very, very comfortable with that theory. Now, you can also apply the strong and high low concept to any form of structure if you want, right? So we can start to apply it to the internal structure as well, okay? So one way to think about this is, let's say we come into our level that we just talked about. We get our bullish IBOS to the upside, right? So we break the bearish internal trend. So now the internal structure is now bullish, right? So now it is aligned with swing structure. We've come off our strong low. Now this should be a strong internal low, right? Because it took out an internal high. So now in theory, when we come down, right, this is why it's high probability or higher probability to now look for longs rather than when we just got the fractal break there, right? Cool, we know that. So now we have a weak high to target, right? And we can continue up. Now, the expectation, right, and this is a nice little rule to have, a nice sort of systematic and mechanical way to think about this, not a guarantee, but just a system to follow, is that when you get that IBOS to the upside, right, and the internal structure is now aligned with the bullish swing structure, we now use the simple rule that we expect this bullish internal structure to continue all the way up until it takes out the weak swing high. Okay, so once this aligns with swing structure, we expect it to continue. We do not expect these lows to be breached. We expect that trend to continue, that internal trend, until that high is taken out, okay? So that's the rule to use. Now, why this becomes useful is because we can continue to obviously look to try and catch each of these higher lows, right? Once we get that aligned, we can then be aggressive and continue to buy higher up and higher up in the market, okay? Because we expect that internal trend to continue. Now, how else we can also use that information is, let's say we get that internal boss, but we haven't yet taken out this swing high, right? Again, I know this is a little bit ahead of what we've learned, but there may be a supply level up here, okay? And we come into a level up here, and then price comes down and it takes out this internal low. Okay, so now what have we had? We have had a bearish internal break of structure. So now the internal structure is now bearish. It's now against the swing structure. And now what we can expect is this low here, this larger low, or this swing low that tried to form, we can now say that it is likely weak, okay? And what we can expect now is that this bearish internal trend will continue until it takes out this swing low. Or sorry, it's not a swing low yet, but this larger internal low. Okay, hopefully that makes sense. So again, I'm gonna go over that again, right? We come into this level here, right? We're expecting the strong swing low to hold, right? That expectation does not change until this low is broken, right? So that will remain true no matter what, right? This will always remain a strong low because it took out a swing high, right? That's set in stone, that will not change. Now, we have bearish internal structure, the larger internal structure, right? We have that bearish trend, we come into our strong low, it then switches bullish when we get the bullish IBOS. So now the internal structure is aligned with the bullish swing structure. Okay, awesome. Now this in theory should be a very high probability area to look for longs because the internal structure is now aligned with the swing structure. So then we continue to buy these internal larger higher lows, these larger internal swings, because once the internal structure is aligned with the swing structure, we now assume, right, that systematic rule, we assume, not guarantee, but we just assume that this internal structure will continue all the way up to take out the swing high, right? It's just a simple rule that we assume. So then if that rule fails and then we get a bearish IBOS to the downside, right, where we take out that larger internal low, so not like a fractal little chalk, so let me redraw that. So again, to make it clear, we might come up here and have that bullish IBOS, right? And then we might get a bearish change of character, right, where we take out a fractal low, you know, we get the candlestick that pulls back, right? But all that is a signal, it's just that we might be having that internal pullback to here, right, to then continue. And that's when we get another chalk, right? And then we can look for that. That's what chalk helps us with. But what we're now focusing on is those larger internal swings, remember? So if we get that, this larger internal trend continues, but then it fails to take out the swing high, right? And then we get the bearish IBOS here. Now, This leg of price action, that bullish internal trend, it failed to do its job, which was to take out the swing high. So now we assume that this internal low is going to go of this leg of price action. Okay, when you get that first initial IBOS, we now assume in the same way that we assumed this was going to continue up to take out that. Once it fails and we get that bearish IBOS, now we assume that that low is weak. It's failed to do its job and take out that swing high. So now we assume that this is going to continue, right, until it takes out that. So hopefully that's clear. Now, like I said, this is still strong no matter what. That stays like that no matter what. So price could come all the way down just to sweep this as liquidity, mitigate something in here, and then we could get a bullish IBOS again, right? And then we could continue. And then we would assume that that bullish trend, no, it's going off the charts, but we'd assume that would continue until the swing high goes. So that's the kind of a systematic way or rule in which we use this, right? So I'm hoping I've explained that as clear as I possibly can. Obviously, watch this as many times as you need to and ask any relevant questions that you have in the Discord or in the comment section below. And yeah, and what we'll do is we'll run through some chart examples to really drive this home. Now, one thing I want to add as well is for some of you guys, you've already worked your way through the course because obviously this is a new lesson. This is tied extremely closely to the concept of order flow, which we are now, we're going to look at when we get into the supply and demand module next. Okay, so if you're working your way through the course for the first time, just be aware now that when you're going to learn the concept order flow in the next module, and just remember that this is very closely tied to that. Okay, so when you watch that lesson, I will remind you of this and probably redirect you back to this video to watch this, and you'll see how it's almost basically one and the same concept. But at the moment, we're just kind of obviously only looking at it from a market structure perspective. But then you'll see how essentially it's all related to supply and demand. And to be honest, that goes for the entire strategy. It's all one and the same thing, that it's all one organic concept, but you just have slightly different lenses and terms for referring to pretty much what is the same thing, okay? Anyway, I'm trying to think of if I missed anything, but I think that's pretty much everything I wanted to cover. Oh yeah, in terms of how we will then map this, for the internal breaks of structure, again, you can do whatever you want. You can use a candle body, right, like we do with swing, or you can use a wick, but these are my recommendations. Okay, so like we've been doing so far, that doesn't change. For chocks, we're still going to use wick breaks, okay? But for these larger internal swings, we want to see a candle body close to confirm it. Okay, that's at least what I do at the time of recording. If you want to use wick breaks, that's fine, but I would recommend these rules for when you're beginning, okay? So that should hopefully make it nice and clear. So let's just do one super quick summary, if I could do it in the most succinct format. We know we have a swing, a bullish swing trend, right? We get that swing break of structure. So after a swing break of structure, what do we expect? We expect a swing pullback. Purely from a market structure standpoint, what is the first most aggressive signal we can look for to potentially signal that that swing pullback may be about to begin, right? That swing run is over and the swing run may be about to begin. We look for a change of character. So that change of character is what we are calling a break of fractal structure, right? Where we look at those little tiny movements in price, where we're looking at, does the prior candle break the prior candle's high? No, we've pulled back. So now we have that change of character. All right, that's our first signal, but obviously it's very aggressive and you can often get fake signals, right? You can do it a few times, you can get a chock and it can continue up, right? So that's why chock is very aggressive and it's that first little signal, and we're going to pair it with more confluence as you work your way through the course, okay? So then let's say that chock does work out and we do start to get that swing pullback, all right? Sometimes there'll be, that larger IBOS here, sometimes there won't, but in this case there is, right? So that's an even stronger signal now than a chock, because not only is the fractal structure bearish at this point, but also the larger internal swings are. And really that's what we want our main focus to be on, right? Is those larger internal swings. All right, that's a lot more significant than just the fractal breaks. Okay, so now we have the internal structure is bearish. We can expect that this bearish trend will continue, right? For that swing pullback to come in. Now, what can happen is, like I said, you can get that bullish change of character, that break of fractal structure. And before we were saying that that was our first signal that a high-low may be in place, a swing high-low, and that's absolutely true. But what we have to bear in mind is it's the most aggressive type of break of structure. So we have to be aware of what's going on with the internal structure at the same time, right? And until that internal structure switches bullish, we have to anticipate that price may have only had a bullish change of character. It may only have broken that fractal high just to facilitate that pullback up to here to then form that larger internal lower high to then continue to the downside. So again, we can use that bullish change of character here, when it breaks the fractal high as our first sign that that high low may be shifting, that the internal break of structure may change, but we don't know that until it actually happens. Once we get that IBOS and we get that larger internal higher high, now the internal structure is truly aligned with the swing structure. And now we assume that that internal trend will continue until it takes out that weak swing high. If that doesn't happen, and then we get that bearish IBOS where we break the larger internal higher low to form a internal lower low, now we assume that that run failed to do its job. So now this low becomes weak, and we can now expect that bearish internal structure to hold, to make a series of larger internal lower lows and lower highs until this low breaks. Okay? And then again, if this swing low still may hold, then that can happen, and then we can do this, or maybe we'll switch bearish, who knows. But that's the way in which we use this concept, and hopefully it should keep you out of some premature losses, right? Waiting for that bit of extra confirmation. But like I said, right, you don't have to always wait for there to be an IBOS to want to get long, especially if we come into a really good area of value, etc., etc. You'll learn about this more later in the course, right? If we get this little bullish chock here, you can get in long here. Just understand it's more aggressive, and you may want to take partial profits as price comes up to that lower high, because at this point, what is this? At this point, this is a strong internal lower high because it took out the internal low, right? It's only once that breaks that the internal structure switches bullish. This then becomes that strong internal low, and now this here becomes the highest probability buying opportunity because the large internal structure is now aligned with the swing structure. Okay, I think I've absolutely beaten that horse to death, or whatever the phrase is, flogged it to death, who knows. Yeah, so I'm really hoping that makes sense. I do appreciate that, and obviously, the course was recorded a fair few months ago. Time of this recording is towards the end of May, so there will be walkthrough videos, throughout the course where this is a bit of the tricky thing, where I'm referring to internal structure, but I'm talking about just the chocks. But I'm hoping I can trust you guys to use some nuance and really understand now that this is kind of the way we're really looking at the market and trying to separate out those little fractal swings in the market with the candlestick pullbacks compared to those larger internal swings, right? And this is a much more effective way of looking at the market, okay? And like I said, this is very, very, very closely tied into the concept of order flow, which we're going to look at in the supply and demand module. So I'm not sure just yet if we're going to go straight into chart examples straight after this or the next lesson. But let's now go and take a look at some real life trade examples, and hopefully this will really start to sink in. Now, just before we move on to some real, chart examples, I do just want to go through sort of one last theoretical example, which it's a bit more advanced. I was kind of hesitant of putting it in here just yet because I don't want to unnecessarily confuse you, specifically if you're kind of going through this for the first time. But I think this makes the most sense to put it in here now, and you can obviously watch this video as many times as you need to, and please make sure you revisit it later on in your journey as well, as it will make a lot more sense to you. But what we're about to go through is what can happen when you get quite large movements in price, which can give you those bigger swing ranges and bigger internal ranges. Because when that happens, that's when you can get sort of a lot of complex movements within there, and that's when it's very easy to get lost within structure. So instead of just talking about it with words at a blank screen, let's try and visualize this so you know exactly what I mean. So just like before, we have a nice big, just think about one time frame again. Let's keep it nice and simple. Everything I'm about to draw is just looking at one time frame. So think of the M15 if that helps you, okay? So we have a big M15 swing run to the upside. We have a nice M15 pullback, and then we have a M15 swing break of structure, okay? So swing higher high, swing higher low, swing higher high, okay? Now, I'm just going to use a different color because it might help us visualize this a little bit. So bear with me while I jump around with these colors. Cool. So we have that swing higher high. Now, after a swing break of structure, what do we expect? We expect, that didn't draw, we expect a swing pullback. So try to draw this as quickly as I can. Okay, cool. So now when we have that swing break of structure, we expect a swing pullback. First little sign we look for is a bearish change of character, right? So we get the little bearish chock, right? With a little, we look at the little candlesticks like we've been doing, and then we get that bigger pullback. Now this is what we've just been looking at in this lesson, is where we get those larger internal swings, right? So we get a lower low, internal lower high, internal lower low, internal lower high, and internal lower low. Okay, cool. Now let me change my little line again. Let's make this, I don't know, green. Cool. So now what we just looked at again in the previous example was if we get a little bullish change of character here, yes, that could be the first sign that the swing high low may be forming, and maybe we can get in long here, right, to then target this weak swing high. But what we have to be aware of is it may have just been a bullish chock, simply just to have this orange internal pullback, right, just to come up to here and then to continue down, right? So we would get something like that, right? That's what we've just been looking at, okay? Or more specifically, we've said that we would get a little change of character here, then we look for the pullback up into here, and then once we get that bearish chock, right, we can then target this weak low, right? And that's absolutely true. But what can happen, like I was saying, when we get really big expansive price where it's quite volatile and there's a lot of room for these big swings, is it's not always just going to have a picture perfect pullback like this, right? And then we go. Sometimes you can have movements within it and it can all get a little bit complex. So this is kind of what I'm getting at here, is if we get this bullish change of character, right, and now we know we're probably at a minimum getting an internal pullback, okay? But within that, you can get these sort of internal swings of the internal swing, if that makes sense, right? The internal structure of the internal structure. This is what I mean where it gets a bit complex. Now, as price then pulls back up towards the internal lower high, right, and we expect this internal lower high to be strong just from an internal perspective, right, because it took out this low, and we're expecting that new internal lower high could form here and we can take out the internal lower low there, right? So that's what we said. So then if we get a bearish chock up here, right, now we can take out this low. Now whilst that is true, this is kind of a bit more of an advanced thing you need to think about when we get this sort of price action, is that it's not until this low goes that really we have that solid confirmation that that larger orange low is going to go, okay? Because what can happen is we could have just bearish chocked just to have this green internal pullback, right? The internal structure of the internal structure, just to come down and mitigate this internal of the internal higher low. All right, I appreciate that's a bit of a mouthful, but hopefully when I draw it out, it'll make a bit more sense. And then if we get a bullish chock from here, now we know that it's likely this high is weak, this internal of the internal high, right? And now we can, expect this high to be run. So that's why if, we're looking at these internal swings like this, right? Internal lower high, internal lower low, and an internal lower high. But then we're expecting that to go, which is fine, right? And we get our bearish change of character. But then if suddenly, again, we'll get into this when we look at supply and demand, but let's say like we've had our bearish chock, we think that new internal lower high is formed to continue that movement. But now if price comes back up to here and we short, this can play out, but it's a lot lower probability because that bearish chock was likely just to have that internal pullback down to this low, right? Higher high, higher low, higher high. We've come in, we've chocked. This low has now failed to take out, this high has now failed to take out this low, right? So now we're trying to short from here. We're trying to short from that weak internal high of the internal structure. Okay, so this is where price can get very confusing if you're not used to this because it's the fractal nature of price action, right? We have the larger overall swing. Then within the swing structure, we have the internal structure, okay, which would be this movement here. So that's our internal low at the moment. And this is our internal high at the moment. But then within that, we have the green structure, okay? So maybe it'll be helpful if I move this to something like that, right? And as we've had that pullback within the internal structure, we had our bearish chock up here, which is a good sign to get short. So ideally we want to get like short there when it just gets us in initially to then target this low, right? So now we get in short here, right? Hopefully this isn't too confusing. Just get rid of that orange line. All right, so if we can get a little chock and then get in straight away, then as price comes down to this low, we can then remove our risk, okay, as it comes into this low. Because then if it fails to break this green low, right, and then we get a bullish change of character here, right, now this high has failed to do its job. It's failed to take out this low. So now it's likely weak. Not always, but it's very likely weak. So we don't really now want to be shorting here. We want to already have been tagged in. Then we can target here because then if it doesn't break and it starts to pull back up, right, it gives a bullish chock, we can remove our risk, okay? We'll talk about how to do this later in the course, but that's why. Whereas if you're not already in the trade, but then you leave your order on, right, and then price comes down and gives us that bullish chock, it fails to take out the green low, this green high is then weak, right? And this is where people can take a lot of losses, not understanding kind of that fractal nature of price action. So again, I appreciate it's a bit confusing. So let's just try and talk through it. Hopefully the colors kind of help a little bit. But yeah, watch this as many times as you need, okay? So we have the swing breaker structure in blue, right? This is all one time frame, don't forget. This is just what can happen when you have big movements in price, and then you can get loads of, fractal complex structure within it, okay? So we have our swing movement to the upside. We then start to have that swing pullback, okay? So if I actually make this blue, this whole leg is that swing pullback, okay? Cool. So then, let's get this back to orange. So then we have those larger internal swings, right? Which is this orange section. So then we're within, at the current point in time, we are within the internal high and this internal low, okay? We then got a bullish change of character to get that internal pullback where we're expecting that internal high, right? That next lower high to then give us another movement down, okay? But within that internal leg, we have another internal leg, right? So this green structure is the internal structure of the orange internal structure, if that makes sense. Okay, so then as price pulls back up towards this level here, right, we have a nice supply level within here, we can look to catch ideally that next internal lower high, the orange line, and we want to catch that next internal orange leg to the downside. Okay, so we look for that little change of character, which is the green structure, right? And ideally we want to be getting tagged in straight away. So we get that little green bearish chalk, and then we want to be getting in, because then if price moves down to here, this internal low, because if we get the green structure now, at this point, the internal structure of the internal structure is bullish. So as it comes down, if this low doesn't go, and then it gives us that bullish chalk, right? Now it's likely this green high is weak. And that's why we don't want to be, then trying to short against that, because it's likely this high is going to get run because this green high failed to take out the green low. Okay, the green internal low. And that's where people take losses. Okay, so it's only once you get that green break here, and the green internal structure then gives us that bearish IBOS. So the green structure trend then switches bearish. That's when we have much more solid confirmation that this low is going to go. Okay, so you can see how it gets a bit confusing. This typically happens when you get those much larger swings in price. And that's when you then need to have that kind of skill set to recognize the different fractal portions within each leg, okay? So I appreciate this will be very confusing if you're going through it for the first time. So do not worry if this part is going over your head. Do not worry, come back to this. But for those of you who are a bit more advanced or have worked your way through, this is kind of something you really want to kind of try and wrap your head around now, okay? We'll go through some chart examples and hopefully it will make a bit more sense, okay? And I'll also try and put a diagram in below in the notes and try and draw it a lot neater so you can really see here what's going on. But okay, so I've just drawn up a bit of a neater example, as I appreciate, all of those drawings can get a little bit messier. So hopefully this is a little bit cleaner to visualize. But like I was just saying, we have our swing break of structure. We expect our overall swing pullback. Remember, this is all one time frame for now, just to keep things as simple as possible, right, as we can. We then have that bearish change of character, right? So the M15, it's an M15 chalk, let's say. The M15 then pulls back and it gives us those larger internal swings where we then get each break of those either internal high or low, we call an IBOS, right? And then we continue that bearish internal movement to the downside, okay? Now we get a bullish M15 change of character, and that gives us potentially that next orange pullback, right? So between the internal high and the internal low. But when you get big price movements, right, when it's quite a big range we're working within, very often then you can get the green movement, which we're seeing here, right, which is like the internal swing of the internal swings, okay? So this green movement is simply the internal pullback, right? The orange internal pullback, right? Cool. So as we come up towards this, let's call it a strong internal lower high, we expect that to hold, and we expect another lower high to form to potentially get one, another leg, another orange internal leg to the downside, right? To give us that next internal break of structure. Basically just continuing on the overall swing pullback, right? Into a deeper level down here. That's what we expect as it comes up into that strong internal high. Okay, so then what we can look for is we don't have to, but we can look for another bearish M15 chalk up here to signal that this strong high is holding, right? And then we can potentially look to target this low. Okay, and what we said before is that once we get that bearish chalk, this low is now ready to be targeted. Now, again, whilst that is true, the next level of understanding is if we can see that there's like kind of those larger internal swings of the internal price action, then what can often happen is price can come down to here, right? And if this low doesn't go, this internal low of the internal structure, right? And we get this scenario here where it gives us a bullish chock. At that point, that's a very good signal that this green internal of the internal high is now weak. And we can expect that this is probably going to continue, this green movement here. If we get a bullish chock, and then we're going to see that, right? And that's when we don't want to be shorting necessarily from this high here. So that's the scenario in which this continues, right? If it comes down, this low holds, and then we get the bullish change of character like we did here, right? We chock, and then we continue up. That doesn't need to be there, okay? All right, so that's the bullish scenario where we can then potentially avoid taking shorts, or we can more aggressively manage any positions, or if you're super aggressive, right, you could potentially look to buy this, okay? I mean, it's not super aggressive because it's pro the swing trend, but this is just when you can really bring that understanding to your next level if you want to be a more aggressive trader, if you want to get into more potential trades, or if you simply want to boost your strike rate, right? Whereby if we get this bullish chock here and this low holds, then we know we don't necessarily want to short from here, right? Because it's lower probability because we assume that that high is then going to be weak, okay? Things like that, right? It's just about information. Depending on how you want to incorporate that into your own trading is going to be down to you, but it's about having that deeper understanding of price and reading what's going on and understanding potentially why you've taken a loss or where you could have managed a trade better. Now, in terms of definitions and how we're going to label things, because I appreciate there's a lot of variables and it gets confusing when you're saying the green price action is the internal price action of the orange price action, which is the internal price action of the swing, right? But that's just the reality of trading. It can get complex, especially when you have these big ranges. So for me personally, I'm still going to classify that as an IBOS, as well as this. So this would be the, if price came down and took out this low, this would be the orange IBOS essentially, right? The break of the orange internal low. And this is also an IBOS. It's just, some of you might want to call that, like I said, the internal of the internal. So that would be an IBOS. But for me, I think it's just unnecessary to do that. You guys can just be aware or use nuance, right, of what you're referring to, or maybe come up with your own system. But that's what I'm going to be doing. So hopefully that's clear. Please watch this again as many times as you need to do. And yeah, there's not really too much I want to add at this stage to make it unnecessarily confusing, but hopefully if you can understand the concept of what's going on here and what a change of character means, but then where it is in relation to what current range you're within. So within the swing range, within the orange internal range, and then within the green, which is the internal of the internal range. And then obviously you could then, within here get swing movements like this, right? And then you get a chock, but then maybe that's just to have a pullback up to this high here and then continue down, right? And that's where price action can just get fractal and fractal and fractal. It's just within, patterns within patterns within patterns within patterns, depending on how deep you want to go. So although I said this is all one time frame, this is exactly the same way, and you could interpret these as all different time frames, right? The blue could be the 4 hour, the orange could be the M15, the green could be the M5 or the M1, right? But you can also see this all on one time frame when we get those big, larger swings in price. Okay, I'll leave that there. Hopefully that makes sense. And now I promise we will go and actually look at some real live trade examples. But the other thing I want to remind you of is when we get onto order flow as well, that will really help to visualize this even more, which is basically looking at the exact same thing we've gone through, but we can visualize it with sort of supply and demand ranges, okay? And it might just be a little bit easier to wrap your head around. But yeah, we kind of need to think about it from a market structure standpoint first. And the one caveat, or not caveat, but the one thing I'll leave this on, if you ever get confused, swing structure is king. Okay, so always think about structure in terms of importance. Swing structure is the most important structure. Okay, it's going to hold the most weight, right? Then the orange structure would be sort of the next level down, and then the green structure. Okay, so orange is going to be stronger than green, and blue is going to be stronger than orange if you think about it that way, right? Swing structure is key. So if you're ever getting confused and you're ever getting lost and price action is getting messy, delete sort of all your analysis on all of this on a live chart. Go back to, okay, where's my swing high? Where's my swing low? And just know what swing range you're within, right? And then start from there. Okay, if you ever get lost in this, and then just stay out of all of this. This is just a bit more advanced when you really want to drill into it and have a deeper understanding. Okay, but if you're confused, just know that's your swing high or low. We want to be looking for buys that are well priced, and that's the way in which we're trying to trade. Okay, you don't have to worry too much about all of this just yet, or ever. If you don't want to, right, you can keep it nice and simple. Alrighty, so we've gone through the theory of kind of, how we're looking at now at swing structure, that larger internal structure, and then the fractal structure within that. I think we can kind of get the theory of it. Let's actually now apply it to real life price action examples and see how we can actually use it to our advantage. So what I'm going to do is I'm going to go through 2 weeks worth of price action on the M15 chart. As I think that's the time frame that is going to help the majority of the community, whether you enter on the M1, the M5, the seconds order, whatever, or even if you enter directly on the M15, if you have more of that swing sort of trading approach, this is the time frame that pretty much nearly all of us need to be nailing and have our best understanding on for that sort of intraday direction. So without further ado, let's just dive into it. Now, actually, before I do say that, the month of May for 2022 is when this has been recorded, has been quite tricky. I know a lot of people have been getting sort of caught on the wrong side of the market a bit, or potentially scratching their heads as to why some POIs didn't work and things like that. But let's dive into it, and I think this will, I'm excited to go through this because I think you'll really see how having this deeper understanding of structure, and we're not even looking at the order flow aspect of it just yet. We'll get onto that next. I think this will really open your eyes to potentially how you can avoid some trades, to potentially how you can get into what previously you may have considered too aggressive, i.e. buying against the trend and really poorly priced areas. This can really help us to potentially do that, or at least have that deeper understanding of price action, which is never going to be a bad thing. So don't want to keep waffling. Let's just dive into it. Now, I think it's very, very relevant to where we are with the current price action that we're going through to actually, do be aware of where we are in higher time frames. Because I'm not going to spend too long talking about this, but basically we are coming into this extreme monthly sweep zone. It's going to refine it to the wick, okay? And this is where price action is at the moment. So not going to bother doing kind of a whole monthly, weekly, daily high time frame analysis, but it's more just about understanding we've come into an extreme area of value for bulls, okay? So, it wouldn't be too surprising we do see a bit of bullish pressure coming off such an extreme level, okay? So going into the 4-hour chart, get rid of that massive orange line, and we can clearly see, right, we're heavily bearish, right? Big long-term swings to the downside. So swing structure is pretty simple on this one. All right, we can clearly see that was the last swing pullback and we had a break of structure. So now our 4-hour structure is between the highest point that broke this low after this low was printed, and now we are selling off. So from a 4-hour perspective, we would consider this to be a swing high, whether you draw your supply from the pivot there or from the single candle, okay? Let's just put on the single candle and be nice and refined. Other levels, we have another pivot here, right? Led to a break of structure. And then we also have, we can see, we essentially have this whole supply range, but we can refine it to this wick here that sits just above there. So yeah, from POI perspective, again, don't want to main focus to be in all of this. We're going to try and keep it more talking about the, obviously the theory we've just gone through, but we can see, right, no inducement in this leg here, and it didn't sweep anything. So it's very likely a zone like this will be used as inducement for something like this above, right? We can see that this had this movement here, then we came down and then we swept that high that caused a low. So yes, that's a pretty nice sweep zone. And obviously we have all of that liquidity behind it for potentially that extreme POI there. But anyway, so the POIs aren't really too much of the main focus here. It's structure, like I said. So from a 4-hour perspective, we've had that break of structure. So what do we expect after a 4-hour swing break of structure? We expect a swing pullback. And typically what we would look for is that 4-hour chock to give us that first signal that we may be putting back, right? Okay, cool. And remember, we are in that monthly extreme demand zone. I'm not going to bother looking left and trying to find super old demand zones. I'm not even sure the data actually goes back that far on the 4-hour chart, on this data feed at least. So M15, where are we? Well, obviously we've been selling off quite aggressively, kind of little movements in price here, and then we've had a pretty decent pullback there. So for me, that is a swing low, okay? And then we get that swing break of structure there. So let's quickly put our little pretty circles on now. Because we're going through 2 weeks worth of price action and we're looking at some points it's going to be, a bit advanced or whatever. I am going to try and do my best to go through this a bit slowly because I do realize I have a bit of a habit sometimes of speeding up. And I'm conscious everyone's at different experience levels and understanding levels, and some people, English is not their first language. So if it is a bit too slow for you, you guys can just use the 2x speed or whatever you want to use. But for the rest of you, I'm going to do my best to go nice and slowly and go through this. And I'll probably break it up into 2 separate videos, right? Otherwise, you may get a bit sick of my voice and also lose concentration. Anyway, so M15, this would be our swing high here, okay? And we've had that swing break of structure. So what do we expect after a swing break of structure? We expect a swing pullback, okay? What's the first thing we can look for? We can look for a little change of character, right? Now, obviously, we want to be looking at those larger internal swings to help us, right? So for instance, this would be how I would view the internal structure, right? And then this is also an internal pullback, but because it's quite sizable, that's a swing, right? And then we get this movement down here, right? We get that internal movement there. So for me, the CHOC and the IBOS would be in the same place, right? So let's play fast forward a little bit. So we're just moving around, nothing's happening. So we'll do through Asia. Let's see what happens over here. Okay, still no bullish CHOC. Okay, so now we have the bullish CHOC, and now we have a candle closure above that line as well. So we've had both a bullish CHOC and both a bullish internal break of structure, right? An IBOS. Okay, cool. So that's a pretty decent sign that, we're getting that swing pullback. We have this area of supply as well. So this would be a decent area in which we could potentially look for the trend to continue, right? Okay, so yeah, let's play this forward a little bit. Now, what would we typically say, right? We know looking for shorts is pro the M15 swing trend, right? The swing trend is bearish. This is our swing high. We can now mark on our swing lows. We've had a sizable swing pullback. Okay, so shorts are pro M15 and pro 4-hour trend, right? Cool. So we've had that pullback. We're coming up roughly more to the premium. We have this nice refined supply level. This would be obviously a high probability area based on all of that confidence to look for shorts. Okay, and that's absolutely fine. We've had our bullish internal break of structure, so we would expect that break of structure, the internal structure to continue bullish. And then once we get that bearish IBOS, right, and the internal trend switches bearish, that's when then we can assume this low has obviously failed to then take out the high. So the origin of that pullback, that orange bullish internal trend, is now weak. Once we get that bearish IBOS, that's when we assume then that the bearish internal trend will stay bearish until we take out this weak low, right? That's literally kind of as simple as we want to keep this theory that we've been using with the internal structure, right? So when we're looking at these slightly larger internal swings, not the CHOC, not the little candlestick pullbacks, but those slightly more significant internal pullbacks, right? That's what we assume, that it's going to stay bullish to pull back. And then once we get that bearish IBOS, right? And this has obviously failed to take out the swing high, then we assume that this leg of price action is now going to get run. And we assume that the bearish internal trend or the internal trend will stay bearish, right, until we take out this low. Now that might not happen, right? We could come into some demand within here, right? And then we may get a little bullish CHOC. And that's the first sign that maybe this low might be holding for a bit. But that bullish CHOC could just be what? Just to come into the internal high. But if it doesn't, and then we get that bullish IBOS, what does that then signal? That then signals that the start of this trend here, this bearish internal trend, is now weak, right? And now we can assume that this bullish internal trend will hold until this high goes, okay? But again, that high doesn't have to go because it could come up and it could mitigate something in here, even though we assume this internal high is weak, right? But we don't assume it's gonna hold. But if we see that bearish IBOS then continue, then we can again assume that this is gonna hold, that bearish internal trend, until this low goes, right? And that's kind of the simple premise that we're gonna use here for reading internal structure, right? For when it can get a bit more complex, we can get big, larger ranges for that, okay? So I just want to kind of get that in nice and early to sort of remind us of what we're looking for. Now, in terms of CHOC, that all still seems the same. So if you're looking at this right now, you should be very, very familiar with CHOC. And if you're not, please go back and really get that nailed before kind of trying to understand these concepts, okay? Right, so kind of coming in towards sort of Frankfurt and London for the day, right? So we've had another little, fractal break there to the upside. So at this point, that would be our CHOC level, right? Because all of those candles break the prior candles high. I don't want to spend too long talking about that because you guys should be very familiar with CHOC. Now this one, it's a bit of a tricky one to see. When you're backtesting, you can miss these, but if you're in a live market, price is moving a little bit slower, so you can spot it, right? We've had the pullback, we had the movement up, and then that candle fails to break the prior candles high. Then we have the movement up, and then we have the movement down. So we have now had a bearish change of character in, let's see, right, the premium of this swing range. Okay, so we know we're at good value, but we haven't hit our refined level. We know that we don't have to. Ideally, we do. We could be coming off this supply range, right? Whatever. We have also had potentially a sweep of liquidity, right? And it looks like, a nice sweep, nice wick breaks, sort of reasonably aggressive moves to the downside, nothing too major yet. Probably looks nice, quite nice on the M1, but if you look at the M15, it's not that significant, right? Now, let's play this forward a little bit. Okay, so now we're starting to sell off a little bit more, right? And we've had a break of this low here. So we know we've already had the fractal break, we've had the chalk. Now this is a bit more of a convincing internal break of structure, right? So that's a bit better than just a chalk, okay? So now we are well within our rights, and I'm sure I was looking at this back at the time to now look for shorts from here, because we know ideally we want to be selling from, the unmitigated POI at the premium, because we know that this could just become, right, inducement for higher. We know that, but we also know price doesn't have to, especially when we're selling off aggressively. We've pulled back to the premium. We've had a decent sweep of liquidity. We've had a bearish change of character, nice big wicks there, and a decent amount of momentum, and also session timing, right? Frankfurt's opened. And we've also, which is what I like, we've broken this little internal low here, right? We've had a fractal break, now we've had an internal break. Okay, cool. But this is where, and this is why it's a bit more advanced, we kind of need to read, how do I say, like there's also larger internal swings as well as a smaller swing, right? So we know we had this internal pullback here, right? And then we had that bullish IBOS there. So we also know that we could just have a movement like this to then continue higher, right? There's going to be kind of those larger internal swings, and then there's also going to be the smaller internal swings within that, right? Because we could have that as a bearish internal breaker structure here, right? And then that could just be bearish like this to come into, say, this demand level, maybe something within here, right? And then that could switch bullish here. And then if that happens, then we assume this high is weak, and then we can look for that to happen, right? And all that was if I now change this to a different color, it might help to see. All that was this internal movement here, right? And this is the fractal nature of the market and why this is a bit more of an advanced concept, okay? And why it can get a little bit confusing. And you can get some mixed biases and et cetera, et cetera. And this is why it's going to take a bit of practice. It's going to take a bit of adjustment too. But this is really how we can bring our trading to the next level. But don't worry, we'll go through tons and tons of examples and you guys will really start to get used to this over time, okay? So, like I said, we have had this little bearish IBOS here, right? Maybe I'll make it a bit of a different color so we can try and separate them out a little bit. I'll try and do green for like the smaller swings, the smaller internal swings. I'll try and maybe use blue or orange, right, for the larger ones. We'll see how we go. Okay, so more than okay, right? In my opinion, to be looking for pro-trend shorts from here. We've had the sweep, we pulled back to premium. Yes, we haven't mitigated anything as refined, which is not as high probability as if this price action happened up here, right? But for me, I'd be happy to look for some shorts from in here, right? So you'd want to see a nice M1 change of character, right? We get our M1 entry model, right? And then we can target, potentially looking to go for the swing low. But with our deeper understanding now, we also know that this movement here, right, could just be to come into this level of demand here, or potentially something within this leg here, right? Again, because it's about understanding those slightly larger swings that could be happening, right? So this is where you just have to go with the flow, look for areas that make sense to you, manage your risk accordingly, and then, potentially look for longs from within here and just be a bit more of a flow trader, right? React to price rather than necessarily predicting, being open to both bullish scenarios at all times, okay? And this is why it's a bit more advanced and why you need to have that deeper understanding of price, right? Okay, cool. Try and speed this up a little bit. So we've pulled back up into that level, all right? And then I'm not going to go down to the M1 and look for entries, but if you want to go and investigate these afterwards, I can tell you that there wasn't an M1 change of character within here. Tell you what, let's go with it, load. Right, yeah, sweet. So you can see how price just shot all the way back up and we never got a bearish shock within here. So if you took a risk entry, that would have been a loss, okay? But it is what it is. That's going to be dependent on your own plan, how aggressive you want to be. So kind of the point I want to make here about this is obviously everyone's going to trade slightly differently and have slightly risk tolerances. But the idea of this lesson is to understand, well, there's a few things, but one thing that specifically about this POI would be that you may want to be more conservative with your entry model here when you understand that if this occurred up here, it would be a lot higher probability. So maybe if this price action happened here, that may be where you want to set that refined risk entry. But because it's down here and because we understand that this could be inducement for higher prices, or this is just that pullback to do that, right? And you'd rather wait for a more significant internal breaker structure, this is then maybe where you want to be a bit more conservative with your entry models and you want to wait for that M1CE, the confirmation entry, rather than taking a risk entry. Okay, that's really just the point I wanted to make there about that, okay? So then we continue to the upside, right? And we have that internal breaker structure. Okay, cool. So let's play price forward. And then we come into our nice level here. So at this point, you are, again, more, it depends on your plan, more well within your rights to be looking for the M1 entry model within here. We are coming into the extreme unmitigated supply zone. Yes, of course, price could, mitigate something within here, but we've already had, a pretty decent movement down and movement away into here, filled up a lot of those orders that led to that movement. So I don't really like viewing those POIs as too significant. You can refinance the unmitigated wick, but again, it's very, very small, right? That's more of an M5 zone. We've already had a reaction from the distal, so it's nailed on this. So I would prefer to wait, if we came up higher from a zone like this for a lot more confirmation. Whereas with this one, this is the unmitigated POI, right? Single candle POI that led to that break of structure. So for me, this is a high probability zone. It's part of that supply chain, right? It's swept to this high here, et cetera, et cetera. For me, that's a very decent M15 zone, just looking at the M15 chart, right? Obviously, there's other bullish confluence. We're coming off that extreme monthly level, et cetera, but let's try and keep it reasonably simple. So if it's within your plan, pro M15 POI, to look for the M1 entry model as soon as it sets in, that's absolutely cool, right? It's not to say that you can't take these trades, but I'm just talking about other confluence that you can or cannot wait for. It's up to you. That's what we're concentrating on here, right? Is structure mainly. So if you wanted to wait for the bearish change of character, all right, obviously you would wait for that low to go. If you wanted to wait for the internal structure, so obviously that's the fractal structure, but if you wanted to wait for the internal structure to be on your side, that's what we would look to break, okay? So if you say get your M1 entry model within here, right, you can then use that as information because you can still get short, but you can understand, okay, maybe this fractal low will hold and will go up higher, or maybe this internal structure will hold. Because before what we were saying, right, is if we come down and got our bearish chock, okay, now we've pulled back, now we have an M15 bearish change character, therefore the swing low is going to go. And whilst that's partly true and partly a confluence that we can use to denote that maybe now price is ready to finish that swing pullback and make that movement, the stronger confluence that we now have is that it's only when you get the bearish internal break of structure that then we can say that low is weak, right? Because essentially we're viewing it like this, right? And then once we get that and that bullish internal trend then switches bearish, like I was saying at the start, now we assume that this bearish internal trend will hold until that low goes. And if it doesn't, fine, we wait for the bullish internal break of structure and then that high becomes weak. And then we assume that will hold until here. Then maybe we can mitigate something within here, right? And we might get a change of character, but that change of character might only be to come and mitigate, right, the internal low at that point. It's only when we get the bearish IBOS that now we can say at least this is weak and the bearish internal trend is going to hold until that low goes. But ultimately, from a swing structure perspective, we'd be looking for that low to go. So hopefully that kind of makes sense of the points. That's like the main focus of this concept that we're really trying to drive home here. Okay, cool. So I just wanted to make that clear that it doesn't say you can't look for the M1 entry model within here, but yeah, I think you guys get the point. Right, so we now do get our bearish change of character, and again, we can still be looking for shorts. That's absolutely fine because we come into a high probability level, but it's not until this low goes that we can assume that potentially this low is now weak, right? So we have to be aware that price could come into here, mitigate something, give us that bullish change of character, and then we would be targeting that weak internal high, right? So let's see what happens. Okay, so the candle does close and we get our bearish internal break of structure. So this is what I was saying. Now we would assume that this low is weak, right? We've had the internal trend, now switch bearish. So now we would expect this bearish internal trend to hold to take out our swing low. So we can keep selling or trying to catch these lower highs, right? Because that now allows us to be a bit more aggressive because before, maybe you don't want to sell that deep in a discount. There's a bit of demand within here, but as long as that larger internal swing stays bearish, in theory, these are can be high enough probability, depending if you want to trade that, right? Because yeah, that's just the way in which this concept can really help us to do that. So now we've had that bullish IBOS. Another point I want to make is if you're sitting here on the M1, right? We know we've pulled back to the premium. We've had our bearish change of character. We've also had our bearish internal break of structure. Everything is now aligned with swing structure. It's now high probability to target that weak low. But if you're sitting on the M1 and you're just trying to sell every little M1 pullback, right? You have to understand after that internal break of structure on the M15, what do we expect? We expect an M15 internal pullback, right? So that's why if you're starting to keep aggressively selling down here, you have to be aware that that's lower probability. You don't have that stop loss protection because it's likely now we're going to get that move right before we go. Okay, cool. So levels we can look at. I'm not going to draw them all on because we really will be here all day, but we want to try and catch that M15 internal low. Okay, and then we get another break of structure. Okay. So at this point here, after that break of structure, right, we could then try and look for another pullback to then try and take out that low, okay? So it's not always, like I said, after this straight internal break of structure, we're instantly going to get the pullback. We already know that with swings. Like here, if you had kept selling the M1, potentially you would have got away with it. But just understand it's lower probability. You want to be selling them, before the break, really. Okay, so we're trying to catch the lower high, and then that goes. Did we get a break of the M15 swing low? No, we didn't, right? We haven't closed below it so far. So far, it's just a sweep liquidity. We don't have that confirmed M15 boss just yet. Now, this is where this concept can come in very, very handy, right? Because we've kind of questioned if price has a really good attempt at taking out the swing low, right? But it fails to do so far, right? And let's say we start to pull back. Well, let's see what happens next candle. So, right, an aggressive retrace. Is this high now weak, right? Can we start to hypothesize that now we're going to come out and take out this high, or is this high weak, or are they both weak? How do we know that? Because I've seen plenty of times where that happens. It's a sweep, and then we break this high, and then we come down, or we break this high, and then we switch bullish, or sometimes it can just reject supply and it can go, right? All those probabilities can happen, right? We're always playing with probabilities, but what systematic framework can we use as like mechanical rules for us to make decisions for when this scenario happens, for when price fails on this attempt to break and close below the swing low? Where is our weak structure, and what do we still deem to be strong structure in which we can continue to short from, right? That's the question. So here's what we're using as a rule. For now, we are assuming that the internal trend is going to continue until it doesn't, right? So we have had a break and closure below that last internal low where that boss was. So now we are assuming that we are still between this internal high, right? And then this would be the internal low. So yes, it's not a good sign that we've swept that low, especially with an aggressive retrace, considering where we are with on that monthly demand, et cetera, et cetera. You have to obviously bring those confluences in the back of your mind if you're trading this live, but let's just concentrate on the concept. At this point, we can still short because we assume that this internal high will hold, right? And this is just a pullback to potentially mitigate something in here and continue, right? It's only if we were to get that bullish IBOS here and we get a candle body closure, right? Now this high becomes weak. Why is that? Well, remember what we said with this internal structure, we switch bullish, we come back, right? And then this is up to here. Then we get the bearish IBOS. So then at that point, what do we assume? Then we assume that that low is weak, which is the start of that pullback, right? So then we assume that the internal trend is going to stay bearish, right? Until it takes out that low. At this point, it's still bearish. But then if we come up and we get a bullish IBOS, which would be this movement here, right? Now this high is weak, right? The start of that leg, the start of that bearish trend has failed to take out the low, right? The swing low. So now we assume what? We assume that it will stay bullish until it takes out that high. Really, really hoping now this is kind of starting to drive in of how we're trying to use this concept, okay? So at this point, right, we know it's not a good sign that price has swept that low because that's quite a bullish confluence, but will this continue? Well, this is what we're going to do. We're going to assume that this bearish trend will continue between these highs. So we can look for some shorts within here, right? Again, you don't have to, because it is lower confluence now that we've had a sweep, we're coming off the monthly demand, it's aggressive. You don't have to, but it's just, this is the framework in which you can use to make those decisions, right? So let's play price forward. Let's see what happens, right? And then we get that bullish IBOS. So now with this candle closure, the internal structure of those larger swings has switched bullish. So now it's not a guarantee, but it's a very strong possibility that this high is now weak, because this is when we have the confirmation that it failed to take out the low, because that trend has now switched bullish. And now we can look for longs, if you want to, right, to target this weak high. And that's it, right? So hopefully you guys can see how useful this sort of method can become when you wrap your head around it. Because what will happen is a lot of traders will potentially look for shorts from here. And again, this could play out, right? This can absolutely play out, but it's about understanding from an internal structure perspective that we now view this as a weak internal high, right? And we expect it to get run. So you could look for shorts from here, but just understand that it's likely to just be a pullback, right? Imagine, we get a bearish chock, right? It could be a supply chain. It is pro M15 swing trend. And that move could happen, of course. But you want to be aware of, it's maybe lower probability now because this is a weak high. And if you do take shorts, maybe be a little more aggressive with your management, because that could just be that internal pullback to form the next higher low to then continue this trend, right? Because this is the internal trend now. We switch bullish, and that could just be a fractal chock to give us that pullback to continue higher, right? hopefully the puzzles that, the penny's starting to drop now. Okay, cool. So let's play this forward a bit. Okay, so we're starting to pull back. And again, like I said, this literally could hold and we could take out that low because swing trend is the most powerful, right? That is the overriding, you know what I'm trying to say. Just playing this forward a bit because we're just chopping around, trying to bring it up to nearer to London. Okay, so let's bring it forward a little bit. Just bring it around to about Frankfurt. So at this point, what's happened? Well, we still know we're bearish with our swing trend, right? This is our swing high. Potentially we're forming a bit of a supply chain here, right? We've mitigated it, but we also know that the larger internal trend is bullish. So we know that this could just be a pullback to go up higher. But what we've also had is we had these nice equal highs and we had a sweep of that liquidity, reasonably V-shape. It's not that strong, but it's there. That then gave us a bearish change of character. Where would it be from this low here, right? So we've had a fractal bearish change of character to the downside, right? And now you could be forgiven for thinking, follow the swing trend. Let's get short from here from London Open and target for that low. But what do we know? We know that this could just be that pullback to continue higher because the internal structure is still bullish, right? We haven't had that IBOS, right? We need a candle closure. So that would be the level we would need to see, right? And also when we pull back, what do we also get? We then got a bullish change of character here. So this is just very, very, ultimately, really, it's just a range, right? It's stuck between this low and this high. It's not really going anywhere. So it's not high probability conditions. And we swept these lows here. Just going to draw that on, right? We've swept the highs. We haven't had our bullish IBOS yet, but if we look at the internal structure, right? This is our low, this is our high. We've had a bit of a pullback. Yes, we did sweep this high and have a bearish change of character, but then we swept these lows, right? And then had a bullish change of character. So it's up to you how aggressive you want to be. But what I would say at this point is shorts are low probability. Even though they are pro M15 trend, they are low probability because we've now swept this sell side liquidity. We know the large internal structure is bullish. And after sweeping that liquidity, we've now had a bullish change of character, right? So shorting from here is low probability in my opinion. Long from here, again, is aggressive and you can do it, but it's maybe, let's say, not the highest of probability because it is counter trend. We have had a sweep liquidity and this could just happen, right? So this is if you want to kind of be the most conservative, you would just sit in your hands. But if you want to be that a bit more aggressive, you now have the understanding that the fractal structure's aligned with the internal structure. This has failed to do its job now, and it's very likely Frankfurt Open, not very likely, but a decent probability we can now target these highs to get that next movement to the upside. Especially when you combine, right, coming off again off the monthly level, sweep liquidity here, blah, 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 blah. Okay, but it's just looking, you guys understanding more about why this short's not great. And if you want to take that aggressive long within here, right, you can now understand the logic behind what previously may have seemed like a low probability or too aggressive trade. This can give you a bit more of a framework to understand these positions, okay? So we reject that level. Bit of movements around. I'm not going to dig into the M1, right? But you guys can go back and back test this if you want. For now, we just want to really have that high time frame understanding. Okay, so now we have that bullish IBOS. So now this would become, our new larger internal low, right? But we're still bearish on the swing structure, so we have to bear that in mind. That's up to you. If you want to keep looking for longs within here, right? You can do that, right? We have demand zones here. I'm not going to draw them all on because we'll be here all day, but that's what you can look for, right? Again, you could buy within here if you wanted to. Understanding, yes, it's against counter M15, yes, it's in the premium, but hopefully this gives you a lot more of a solid framework to look for these more aggressive positions. But you just maybe want to be a bit more aggressive with your management as we come into these levels. Now, let's say you were focused on wanting to, because we still assume, right, that this is a strong swing high on the M15 and this could hold, and we could then get that movement to then finally take out that swing low, right? I'm just going to move this back to orange. Cool. So again, you can look for your own monetary model within here. Not saying you can't do this. This is just focusing on, trying to get a deep understanding of price. Now, where is the change of character? Well, all of these candles break the prior candles high. So to get our bullish M15 shock, right, to get fractal structure realigned, we would need to see this low go here. So now for me also, that's a reasonably decent pullback. So I'd also view that as some decent internal structure. So that would be both the fractal low and an internal low. But this is where price can get a little bit kind of like this section here, where you've got those smaller internal swings and you've got slightly larger internal swings, okay? And this is why it can get a little bit more advanced and complex at times. It's not always as nice and clean like this, okay? So what I mean by that is you have this movement, you have that internal pullback, And then you have that internal leg. And then we have, if I use green to show you the smaller swings within that, right? Like we have these movements here, right? So appreciate this is a bit messy, but if we were to come down, not only would that be our chalk because that was the last, fractal low, that is also going to be a green IBOS of the smaller swing, but that green IBOS could just be to come into the orange low, right? Because that's the big pullback, that's the orange move up, that's the orange pullback, and then that's the orange leg up. And then you have the smaller green internal structure within that, right? So although you get a bearish IBOS there and we can look for shorts, you have to understand that that could just be to come and mitigate this low. And then if we get that bullish IBOS there with the green structure, right, then we know that we can target that high. Okay, so this is where structure can get a lot more complex. Sometimes if you're not sure if that's the IBOS or if this is, and that's where you kind of need to have that, be able to read between the lines and look at both here. Okay, so what happens? We come down into this level and then the demand holds. We don't even get a bearish change of character. We don't get a bearish IBOS. And then we break this high. What happens with a swing structure? Let's see. Okay, we just sweep it by a micro pip. We're going to switch bullish. No, okay. But if I zoom in, you guys can see this. What do we get? We actually get the bearish chalk. So I'm just going to move that up here because that's the fractal low, right? That was the last candle to fail to break the prior candle's high because we had an up movement, a down movement, and then an up movement. Just going to make that orange. It's easy to see. Ooh, not that color. Okay, cool. Now, so at this point, we've had a sweep of the high, tiny one, but it's then on the list, and we've had a bearish change of character. So again, you can look for shorts from within here, right? It's pro trend, etc., etc. You guys should know this by now. Did we get that little IBOS here? Not yet, because we need there to be a candle closure, right? But remember, this is the two ways we're looking at structure. We have this larger swing here, and then we have those little swings, right? Imagine this is that green line, okay? But if we do get that candle closure, that could just be that green, let's make it green, right? That could just be that green trend just to come in. I'm going to keep drawing this. I know you guys probably get it, but I really want to make sure it's clear. That green bearish trend could just be to come back to mitigate here and then go, right? Cool. So let's speed this up a little bit. So coming in there, right? Nice, some shorts, but it's only then do we then get that bearish IBOS, right? Cool. And then again, you could look for some shorts from there as well. Right, tap into that range there, and then we come down. Now at this point, especially as we're kind of coming into the extreme of sort of that, that orange low, is it as high probability to keep looking for shorts from here? Maybe, right? Because it's pro trend, we've had the sweep, that bearish order flow may continue, right? And that could happen, and it's going to be down to you to whether or not you want to wait to see what happens with if this low breaks or not. You just have, but this is about understanding why maybe things don't work out, because in this instance it fails and it goes up higher. So now what we've had is that bullish IBOS of the smaller internal structure, right? Now hopefully you can see what was going on. So I'm just going to draw it on one last time, right? We have the orange movement, which is the larger internal structure, and then we have that leg up there, right? And then we pull down into here, and then if we get the green, right? That's when we were looking at these smaller swings, right? Looking for the candle closures, all right? And then we could come, actually that candle didn't close above. So technically, if you want to be very strict, right, that would actually be the low. And then that would be your IBOS there, right? This is where I can get, you can use a little bit of discretion here and read between the lines. And then when we get the break of that high, right, now we know that this high is definitely weak. We've aligned and we can then look for that movement there. Okay. Hopefully that makes sense. But it's just about understanding why sometimes these things didn't work. And if you were looking for shorts and then you're confused as to why, we didn't go on to take the weak low, it's because we can see that larger internal structure never switched bearish, right? That's the real point. But sometimes structure will get a bit complex and a bit messy, but it's knowing that, and only once this low went here, that's when we can have a lot more confidence, right? If that broke, now we can really start to look for that movement, right? Unless that happened, okay? And then right. Hopefully you guys are really getting this. Cool. So now we come back in, right? And then you could look for those longs, right, to target at least that weak high, which then ends up being, finally, we get our swing breaker structure. And I'm going to play price for a little bit to get to the next interesting bit of price. And then this is obviously when the M15 has switched bullish, and we can potentially anticipate that for our, let's have a look, for our pullback up to these levels, right? And that's when we can start to play that. Because what have we also now had? We've had a bullish 4-hour change of character, right? We swept that low and then we came up and then we took the high. came back into that 4-hour demand, which is under confluence, right? There's loads of other confluences we could be looking at, but I'm just trying to really drill it home more about the internal structures, okay? And now we can look to follow the trend to the upside for a bit. So it's going to play us forward to a bit more of an interesting bit of price, but like you can see, even I got caught out with this in the live market, right? Trying to take a counter trend short. So I think we came into this level of wick supply over here, and it gave us just a little bearish chocks. And you think, okay, after an M15 boss, what do you expect? An M15 pullback, bearish change of character, that can start the pullback. But we know just on its own, especially when the start of a new trend, when things are very, very a lot of momentum, we don't often get deep pullbacks. Just trying to trade that short and M15 chop can catch you out. Because really, looking at these swings, we can see the swings. It's just super bullish, right? It's just really about waiting for those internal structures to align. That can give you a lot higher probability rather than just a chock. Chock is just the most aggressive form of structure. So we smashed through that first, which we knew was a rubbish 4-hour zone, right? Because it had no inducement and it didn't sweep. Now coming into this larger zone here. I don't want to spend ages looking at supply and demand and trying to refine it all. Just kind of really want to focus on the internal structure. Okay, take a sip of water. All right, so we're pulling back, not even a shock, not even in a bearish IBOS, right? Nothing going on just yet. So let me try and get it to a bit more of an interesting area. Okay, so now we have a swing breaker structure, right? And we know we're within that 4-hour supply. I'm just going to move that away so we can focus on price. Okay, cool. So the 4-hour is bearish, right? We know we could potentially see a 4-hour lower high from here, or for a minimum, right? What we can expect is potentially a little bit of a 4-hour internal pullback to then continue higher to premium supply, or maybe we'll switch bullish because we know we're coming off a significant level, etc., etc. But at minimum, we're in a nice, decent 4-hour level. It is technically a sweep zone. It has inducement. It's in the premium, so we can expect a bit of a reaction. What's the most decent thing? Not decent, but an obvious little signal we can look for, right? Because we had a bit of a fractal pullback there. Is we could look for a 4-hour chock to signal that we get that, and then potentially we get a 4-hour bullish chock, right? And then we know we can then look for that movement there, right? That's decent. We should all know that by that point, and that's something that we look for. Okay, cool. We should all be familiar with that. M15 swing low would be the lowest point that took out the swing high, right? So that would be here. We are bullish. Okay, now what happens? So we get a bearish change of character. We have had essentially, right? It's the nature in which price does it as well. We've had all of these nice equal highs. We're within a 4-hour POI. We could go look left and see if there's any M15 supply, but blah, blah, blah. Let's try and speed this up, right? Now I had a bearish change of character, but it's also that V shape. So that's like quite a bullish sign, right? That's the M1 entry. What do we look for, right? Liquidation, high time frame mitigation, V shape reaction, chock, right? So that could be a decent level to try and catch that 4-hour pullback, right? Even though we know the M15 is still bullish for now, but when we're in 4-hour supply, that is when it becomes higher probability to do what? To play counter M15. You don't have to, but these are the areas in which it becomes higher probability to play them, or at least have that understanding that maybe you don't want to keep buying the M15 trend because of where we are and the nature in which we've reacted within here. Liquidation, mitigation, V-shaped reaction, chock. Now in this instance, for me, that would also be a bearish IBOS because that's a reasonably significant little movement there. Okay, so we have this M15 demand, which is obviously pro M15 trend. It did sweep liquidity. It led to a break of structure, right? That's fine, but I just explained why it's not high probability to keep buying from here. You can, and it can play out, but it's about having that understanding, as I keep saying. I know you're bored of me hearing it, but I have to drive this home. Right, so we know this is our swing high, and this is our swing low. Now, like I keep saying, you are, again, well within your rights to look for the M1 entry model within here, but this is about understanding why you may not want to do that and when to wait for more confluences. Because that's the question we get a lot. When do I wait for an M15 chock? When do I wait for M15 supply demand to fail? And in what situations do I not wait for that and I can be aggressive with the M1? Well, when you can wrap your head around all of this, this is when you can make those decisions, right? On a more of a case-by-case basis. And again, I'm sick of saying this phrase now, but getting that deeper understanding of price action, right? Okay, so we come into this demand level, it's pro M50 trend, but we know probably not a good area to wait for. So two ways of kind of viewing this, right? One is you only want to focus on the pro M15 position. So what I would advise you wait for in this instance, but you don't have to, is at least wait for that bullish M15 change of character, which, we're looking at relative price action. We could, potentially view as an IBOS as well, but I'd be more looking at that larger swing, right, that potentially it could be just to do that and then continue lower. But at least if we wait for that, we have a bit more bullish order flow and a shift of fractal structure on our side. Because if you get an M1 change of character within here, yes, this could play out, but it can also just be just to mitigate this and then continue lower. So ideally in these scenarios, if you want to get in, the best sort of ideal way it can happen is price comes in. Imagine this is the M1 now that we're looking at, and you get an M1 entry model, right? And you get in long, but you get in long before price has reached here on the M15, right? Because then when price does come up here to the M15, you can now remove your risk, right? Whether that's trading to stop your stop loss to break even or removing profits, right? Because then once it's there, if that then holds and we don't get that, and then this comes back down, right? You've removed your risk. But what happens is either people don't get in, they see that movement, and now they're trying to buy here against this, and that's where you're taking those unnecessary losses. So that's hopefully clear as to why you don't necessarily want to do that. Okay, so let's fast forward a little bit and see what happens. Now I said there's two ways you can view this. So the first one was if you're just concentrating on the longs and you want to wait for a bit more confidence, you want to wait for this to break. The second way, and this is the more advanced way, is if you want to take the short, right? Because again, we've come into that 4-hour level. We've had this big liquidation, the V-shaped reaction, decent movement to the downside. This is bang on around Frankfurt Open, right? And you could look to say, okay, I want to take this long because the internal structure is still bearish. So I'm happy to accept the risk that, yes, this is more aggressive, but I want to take that anticipating that we're going to switch bearish and risk rewards on my side, etc., etc. But it is more aggressive because, of course, you're trading against M15 demand in the M15 discount against M15 trend. But again, it's having that deeper understanding of this is how you can be more aggressive if you want to, right? And there was an M1 trade within that. Okay, and then that's that movement away. So now the M15 switches bearish, right? This remains our swing high. Okay, cool. So now potentially, again, if we go back to the 4-hour chart, this is what you have to have the back of your mind. We've now had that bearish 4-hour change of character. Make sure, yeah. We've had a 4-hour change of character from 4-hour supply. So now, this is what would we say before? We would say, okay, we've had a swing pullback, we've had a bearish chalk. So now it's all systems go to take out this low. Well, not necessarily, especially when we have an unmitigated extreme above, especially when we're coming off that monthly level. We don't have to worry too much about that. What this is more now is how we really view this, and we should have known this anyway, but trying to really drive this home is with a chalk, right? Especially with the momentum that we've come here, it could just be, and if you look at all my analysis of markets back then, right, it can just be that larger internal pullback to then do this, right? And again, that can just be that to then do that. But it's only when we get, like if that came down and then got that break of internal structure, those larger swings, now we say with conviction that we're going to take out that low. But when we just see the bearish chalk, that's the first signal that potentially we're going to come down. But all we view it as is just an internal pullback to then do that, right? So yeah, hopefully that's clear. So we have to have that in the back of our mind. We can't just look for shorts and then just hold full volume on thinking that we're going to take out that low, right? But what does that also help us is it also helps us to be on the lookout for longs as well, right? To potentially catch that internal high low, right? So even just target this high or up to here, or if you've really got the hard time frame foresight, right, to try and potentially anticipate we're going to come off that monthly level, right? Cool. So back to the M15. How can we now interpret this for this trading day? Well, we know we've got the M15 extreme up here, right? And we have this level here. So what's the first thing we can wait for? We can wait for a bullish change of character. Okay, so we're starting to sell off. The chalk line will be, let's see, here, all right? Okay, so now we have a bullish change of character. So that's a good first sign. The way I would view the internal structure is this nice clear movement here. So this bullish chalk could be just for price to come up and mitigate, right, the strong lower internal high. And then we can look for an M1 entry model within here, or maybe you want to wait for a bearish chalk, right? And then we can target this low. Okay, so very kind of a simple one here, right? So let's play this forward. Right, so you don't want to be shorting from this high because this high did not break anything this high, right? If you look at the movement down, it didn't even give us, did it give us a bearish chalk? I don't even think so, right? That wouldn't be the chalk level. Yeah, it would be, sorry. That would be the chalk level. It didn't even break that. So this is where, potentially you could take an aggressive long here. I'm not a big fan of zones like this where there's a big wick underneath because it's not always super clear if it's going to come down. But that's just, you don't want to be shorting from here because that high has not broken anything. This is about as weak as that high can get, right? So then we'd be looking for price to come into here. In this instance, it doesn't. It spikes up through, sweeps those perfect equal highs there, and you can, it's an aggressive sweep entry. You could look for a potential entry within there. But did we get a bullish IBOS? No, because we never got a candle closure, right? So this is still, that internal high, right? That's still intact. So what we are now looking for is we're still looking for this low to go, right? Because that's the movement, right? And that's just one movement there. Okay, so what I'm actually going to do here, we'll kind of wrap up this video now. This last sort of bit of price action we'll go through for this video, and then we'll wrap that up there and potentially do some more in a separate one. But let's look at this as the orange structure, and you'll see why I'm doing it this way. For now, we've had that internal break. Okay, we had our bullish change of character, but we know that could just be to facilitate the movement, just this strong internal high. Okay, so then what happens? Let me use a different color. Is to facilitate, well, let's use orange, to facilitate that orange pullback to this lower high for then that next movement here. Within this orange pullback, what can we have? We can have internal structure of the internal structure, right? And that's what we get, right? You could view that as an IBOS, right? That little movement here. You have to see how that's different to the size of the orange pullback, right? And this is where you have to use that little bit of nuance. And then we have that bullish green internal trend, right? The smaller internal trend. So when we then have that sweep of liquidity up here, and we fail to close above the orange structure, the orange structure is still bearish. So the orange internal trend is still intact, okay? We look at the M15 price action, right? We do get a bearish chalk because this is that M15 low. So the fractal structure is now aligned, right? It's bearish. So before what we'd say is we've had a swing pullback, we've had a bearish chalk, so now we can take out the swing low, all right? But with a deeper understanding, it's not until we get a break of this green low that then we can truly say that that low is going to go, right? Because this green internal trend of the orange pullback could still be intact, and it could be a bearish chalk just to mitigate demand within this low to then continue higher, right? So although the chalk is a very, very good signal and we can still trade with that, it's not to say that we can't, it's just about understanding what could happen, right? And it's only when we get the break of this green IBOS here, that's when we can say with absolute conviction that it's very likely the orange low is going to go. So let's see what happens. Okay, so then we do get it. All right, so now we can say that this low is going to go. So let's see what happens next. But we start to pull back. Okay, so what happens now? Well, we haven't obviously closed below the swing low or the orange internal low. So we haven't had a bearish IBOS. So now we've had a good go at it, and we're retracing. Is this high now weak? Well, remember what we said back with this example right at the start, right? When we swept this low here, right? And then we started to pull back and we got a bit of change of character. Is this high weak? No. We assume that this high, from an internal structure perspective, we assume that this high was still strong because it did lead to an internal boss. It's only once we got the closure above here that now this high became weak, right? Because once we got that bearish boss here, this green trend should have stayed bearish, and it could have from here until it doesn't. But once it switches bullish, then the start of that bearish trend then becomes weak, right? So if we go back here, what's happened? Well, we had the bullish green internal trend, right, as part of the orange pullback to take out this low. The orange trend is obviously still intact. We haven't had a close above there. But in terms of the green trend, it was bullish. Then it switched bearish. So now we can expect that internal pullback, right? And we can expect price to potentially come into somewhere from here, okay? So that's why at this point, we don't say that this high is weak, and we can still look for some shorts from here to then target the weak green internal low and the weak orange internal low. Hopefully that makes sense. Watch that back if you need to, right? So let's see what happens. And this is where we can keep looking for shorts, right? We've got an M15 POI here, just quickly show you, right? Buy to sell wicks, et cetera, right? And then that's just where you can be aggressive and keep looking for those trades. Okay. Now, this is the orange boss line, right? Do we have a break and close? We don't until then. But if I bring it back one candle, where's the line? There we go. Okay, here. So we fail to close below. All right, that's fine. It's not weak yet. We need the structure to switch bullish. Then we get a bullish change of character, but it's just a liquidity grab, right? We still have both the green and orange internal structure as bearish, right? So CHOC doesn't mean a lot on its own, okay? So do you want to buy from here? Maybe you don't, but you're buying against, all of this weak structure against counter M15 trend. It's not high probability. You want to wait for that green structure and the orange structure to switch bullish right at that point. So now we have that break and closure below, right? So now where's the new orange structure? You can see we've had that pullback and that pullback. But that's, for me, that's now a convincing swing structure, okay? So that's just kind of how you can view that with the larger internal structures there. Let's just tidy it up a little bit. But yeah, it's kind of the key to see, like, you've got the larger internal swing, right? And you have that. Let me draw it on like this. 1, down, up, down. And then within that, I know this could be a little bit pedantic, but it can really help, okay? And then within that, right, we have this. And then we take that low, then we have that little pullback, but that does not mean that because we failed to take out the low, or even when we swept it, that this high is now weak, because we know that as long as the green structure stays bearish, we can still go down, right? And then that's what happened. Now, do you recognize this sort of price action? Well, if you remember back to here, that's exactly what happens here. Except, in this instance, the swing's bullish, but just pretend we're bearish, right? We have that orange movement down, right? And then we have this green pullback. And then it's only once we got this IBOS here that now we can say that this low is now ready to go, and then we can look for that movement here. Whereas if it had to come down here like this and then gave us that bullish CHOC, now this high is weak, right? So that would be here, right? And I keep saying right, I'm gonna try and stop saying that. Let's bring it back to here, right? Sorry. Oh no, I shouldn't have pointed that out because now you're all gonna notice it. So I know you guys probably really get this, and this is frustrating, but I'm going to end it on this little mini lesson, and then we'll potentially do some more examples in a separate video. But we have this movement down, we have this larger swing, and then we have this movement down. Then we have the green movement. We failed to close above, so the orange internal structure is still bearish. So we come down and we can look for shorts, etc., etc. We can target this side, that's all fine. But let's say price failed to break this green low, and then we got a bullish M15 CHOC here, like that. Now we can assume that potentially this high is weak, and then we can target that high to be broken. Cool. Hopefully that makes sense. That's all the point I was trying to make through there, and how you can add this into your trading decisions, right? And then eventually we get the swing break of structure. Okay, let's just see quickly what happens after this now. So this would be our new swing high. Right, and then let's keep going. Let's go for a little bit. So this is all just one swing leg down. Then we get a bullish change of character. I'll tell you what, we'll be going for an hour. Let's pause it because I don't want you guys losing concentration. And then, we'll see how many parts this goes to. But I am keen to kind of bring it all the way through to the 27th of May, which is another week or so, because there are tons of more lessons and examples that we can go through, okay? But I'll leave that there. Watch this as many times as you need. I appreciate some bits were pedantic, but I think it's really important you nail this, because there will be some instances in which this can get a little bit complex in the live market. But yeah, this is super powerful when you really get it and the penny starts to drop. I know, when we combine it with order flow, it's basically the exact same thing we've been looking at, but we're going to start to draw on basically supply and demand ranges, and it will make it maybe a bit visually easier to see. But if we can nail it with structure first, it will become a lot easier when we start to introduce order flow. So I hope you guys took some value from that, and I'll see you in the next one. Cheers, guys. Alrighty, let's just pick up straight back where we left off in part one. Hopefully you have already watched that. So kind of a quick recap of where we are. Let's have a quick look at the 4-hour time frame. So remember, we're coming off that extreme sort of monthly level. So we do have to understand, right, potentially we could have that longer term hard time frame pullback, especially as our daily swing high is all the way up here, right? Because this was our last daily break of structure. We've had that movement down. Okay, so we always have to be aware in the back of our mind that although the 4-hour trend is here, right, the 4-hour could switch bullish to facilitate that daily pullback, so on and so forth. 4-hour swing structure, what we went through in part one was essentially after that break of structure, right, how to play that pullback. Then we came into a decent level of 4-hour supply. We had our bearish 4-hour change of character, which happened to line up with the M15 bearish boss. So the M15 swing structure switched bearish, and in line with that fractal break as well. And then we were just looking at these sales here. But we are aware, as we always should be, particularly with how it's all happened, right? Coming off that extreme level, big sweep of liquidity, almost V-shaped reaction to supply. We have a mitigated extreme supply above. And like I just said, we know that the daily, that's that run. We could easily have a daily pullback to premium supply before continuing, okay? So the point I'm really trying to drive home here, even though obviously I'm benefiting from the benefit of hindsight, I know how this played out, is we were saying this. If you go, for those of you who have obviously been in the community whilst it's been happening, we've been saying this, constantly been talking about the level we've been coming off and constantly talking about the possibility that we can have that pullback. So although, on paper, if you were to look at your trade plan, right, if it's, similar to how we teach and trade, you would say, okay, well, we've come off a premium 4-hour supply level. We've had a 4-hour bearish change of character. The M15 is now bearish. Shorts are pro M15 and 4-hour swing trend, etc., etc., etc. Should be easy to target this low. Okay, but hopefully now when you're really trying to become that better trader, that more advanced trader, getting it to that next level, you have to take in all of the pieces of the puzzle, read the environment, the nature in which it happened as well, big sweep of liquidity, V-shaped reaction, right? That's kind of the start of the entry model in which we could see that. So when we do get those bearish changes of character and we do get the M15 bearish, 100% I will be looking for shorts in the high probability, and they could always take out this low. But I'm always in the back of my mind, right? Like we were saying, that this can just be a 4-hour internal pullback, right? Maybe down to this demand, maybe not, to then continue higher. Then again, we can look for shorts from here, which would be even higher probability that potentially that swing lower high will be in place, because this will have to hold, right? Obviously, for that 4-hour bearish trend to continue. But with the overall knowledge of all the pieces of the puzzle, that's when we can be either more aggressive with, we can look for those counter trend longs to anticipate that movement here, and then again, right, continue that movement, or we can just understand why shorts may not work out, or we may want to be a bit more conservative with our shorts, or we maybe just want to be a bit more aggressive with our management, so we take profits a bit quicker. And that's really kind of the point we're trying to get to, is just bringing our trading to that next level. So yeah, we had that swing break of structure. This is our swing high and swing low here on the M15, right? But where are we? We've come into a level of demand, right? Now, if you want to be really, really, really accurate, if we actually look at this level of demand, you see how after the demand was created, right, when we had the bullish candle close above there, with that next candle, it came in, filled those orders, and continued to the upside. So the way I view the market is you want to do it on the unmitigated level, and it would be those sell to buy wicks, because what is that in a lower time frame? That would be price coming down, coming up, and then it pulls back, fills up those orders from that demand, and then goes. So technically this would be your unmitigated POI. Sometimes I'll just draw it like that, right, and include the wick, because there can be orders there below. But anyway, so obviously that led to a break of structure there. And we can also see, if we look left, it flips that sort of last point of supply, right? It's extreme, that reaction leg where we really gained a lot of momentum, some nice inducement as well. And that was where I actually got caught out trying to short this back then. We swept the liquidity below that chart, whereas when I saw that, we pulled back in, I tried to get short here and I got my ass handed to me, which is always fun. But right, it's about trying to, learn from our lessons and see what we can gain from the market, not over analyzing our losses, but trying to see, is there pieces of the puzzle potentially we have missed to try and improve going forward. Cool. So we've come into this level. M15 is obviously heavily bearish. It's aligned with the 4-hour swing trend. But we know, looking at the larger swings in price, that potentially this is one movement up just to have that internal pullback to potentially go higher. Okay. Cool. So we come in here, we have had a bullish change of character. And this is kind of a perfect example of what I was saying with bullish shock. It is the most aggressive type of structure break. It's literally fractal structure. That is more like an M5 pullback or an M1. So yeah, it's the first little sign we could be going, but I guess a more significant internal break of structure I'd want to see would be this high here go, because that's kind of the last real sort of visual actual swing, internal sort of swing, right, we can see in the market. So if that went, that would be a bit more significant for me. But that's not to say that you can't look for longs from within there. Of course you can. It's been around the start of Asia. So we move to the upside, we get a nice bullish break of structure. Okay, so what's the sort of framework we're using is we expect that internal structure to go, and then we could have a change of character up here, nice premium supply, and that's a good first area to look for shorts, but we're aware that that could just be a bearish chock, right? Just to facilitate that pullback down and towards that internal higher low. So then if we see a bullish chopping within here, right, then we know that that high could be weak and then we don't want to sell from it and we could be coming up higher. But if we do get a bearish IBOS there, then that's a great, much more confirmed signal that now we're ready to take out the low and we can follow that bearish trend to the downside. If we say fail to take out that low and we reject some extreme demand, then if we get a bullish IBOS, right, then we know that this high is now likely weak and we expect the bullish internal trend to continue until it takes out that high, right? That's the kind of framework we've been using, and hopefully we're starting to get more and more comfortable with that now, so I can go through price a little bit quicker until we get to some kind of interesting and slightly more complex scenarios. Otherwise we'll be here for hours and hours and hours. Cool. So we haven't quite got a bullish close above there, and now we do. So that's our bullish IBOS, right? So now this would be that next sort of bearish level I'd want to see go before we can kind of really have confidence that this weak swing low is going to go. So obviously there's supply levels over here. You can be dropping down to them one and looking for your entry models depending on what confidence you look for, right? I'm going to leave that down to you guys at this point. That is not a bearish chock. Why is that not a bearish chock? Because that never took the high, right? It's actually equal highs. Let's double check that. The high is 069 and the high there is 069. So just looking up here, of course, to see that. So that means this was never in a low. So we actually didn't get a low there, and we've left some nice perfect equal highs, which is obviously bullish confluence. That price may want to target it, right? So at this point, our short's going to be high probability. Well, we haven't even had a bearish chock. Maybe we've got a nice M1 entry within here when we came into this POI potentially. But now what I'd be looking at from an internal structure perspective is price is just coming into here. So then if I saw a chock, then I'd be expecting that high to go, right? So let's see what happens next. Don't quite get a closure. Now we get a pretty convincing solid closure below. Let's draw our swing structure so we can keep aware of where we are. So at this point, what would I be thinking? Well, the internal structure, especially quite significant larger internal structure, is now aligned with the M15 swing structure. So I'd have a pretty decent idea or framework to work with that this weak swing low is now pretty much ready to go. It doesn't have to go straight away. What do we expect after internal break of structure? We can expect that internal pullback before going. Okay, so let's see what happens next. Okay, that's quite an aggressive V-shaped reaction from this sort of extreme demand area. If we take the pivot range, there we go. Okay, so bearing in mind what we were saying on the 4-hour chart, we know that potentially this was just an internal pullback to continue higher. We've pulled back a decent amount, from this leg, roughly the EQ. We've come into a very reasonably significant demand level. We've had a decent move away, we've come down, and we've had quite an aggressive movement away. So this is where the question is, right? And I was asking this as well, how do we interpret this high? Is this high weak? Well, with this framework, this is how we can use this. Well, because we've had, remember, the bearish IBOS, so this was the bullish internal trend, and then it switched bearish. What do we assume about this green internal trend? We assume that it will continue until it doesn't, right? That this is a strong internal high, okay? So as we're coming back up, right, we can still look for shorts from here, from whatever POIs you have, and potentially assume that that will continue, okay? That's the mechanical framework I'm now using. I'm not saying that's weak. Now, does that mean that you have to take trades from here? No, of course not. This is where you need to use some nuance. I need to read the bigger picture, taking everything into consideration, i.e. equal highs sitting behind it. The fact that that 4-hour internal pullback may be finished to continue higher. The fact that we're starting to build this demand chain that makes sense, right? We swept liquidity. The fact of how it's coming back, right? That big, strong V-shaped reaction. Okay, there's things that you can bring into your decision making as your own individual trader as to why you may not want to look for shorts. But in terms of the mechanical question, is this a strong internal high or not that we would expect to hold purely just from that little concept on its own? Yes, it is still strong. Okay. So that means you can look for some shorts from here. But the point I'm trying to make is you as a trader may not want to set a risk entry on that extreme M15 POI. You may want to see a lot more confluence, right? You may want to see an M5 shift in structure from when we come into that. All these things that you may want to use. You just may want to be a bit more hesitant about this, okay? Now, there is no bullish chock here because from this moment, all of these candles break the prior candles low. So that's all one fractal down movement. Now, let's just imagine for a minute that there was a pullback here, a candlestick pullback, and we had that movement. Just imagine there was. So let's say that this was a bullish chock. That still doesn't change what we just said, right? Because remember, this is still that strong internal high because it's based on the internal structure. So the chock does not mean anything in terms of this, or at least the way I'm viewing price action since at the time of recording, okay? So you can look for shorts. as we're coming into this level. Now, price pushes up and it spikes straight up through that. So we do not have a internal break of structure because we need a candle closure. So you could still look for some shorts from here. But again, this is where you want to be, that advanced trader, right? And reading between the lines, all the things I've said, the amount of momentum we're getting, and maybe you want to see a bit more confluence before you want to jump into shorts necessarily. Because if you're looking at how strong this is, if you go down to the M5 or whatever, right, you're going to see these kind of swings in price, get a little bit of a pullback there, and then that. So maybe, especially if you can't get in the short initially on the M1, if you're being aggressive and price is all the way down here, and then we come into these levels of demand, right, and then price is coming back up, maybe you don't want to short in here because is it that clear at that point? Bullish intentions are starting to come in, even though the internal structure is still bearish, right? So maybe this is where you want to wait for like this low to go. And you just want to see something like that, a bit of a shift in order flow, and then you want to get in. Or you just want to sit in your hands because it's not a bit clear, right? This is where, structure can get a little bit more complex. And, reading everything together, hopefully I'm going to make that point clear. But just purely in terms of the internal structure, yeah, we would still view that, right, as a strong low. But this is just where you want to use a little bit more nuance and go, okay, maybe I want to see, right, that shift. And then maybe you'd have a bit more confidence, right? Because it's likely this could be just becoming inducement for the extreme up here. And then again, also drive that point home. That can be this movement, right? We have to look at the bigger swing. So don't forget to zoom out a lot as well. If you want to use a 1 hour chart, whatever helps you, but you don't have to. You can literally read what's going on the 4 hour chart and the daily, just all on the M15. Like if you imagine TradingView broke and whatever time frame you're on was just stuck with, right, for the rest of your life and you can never change it. Doesn't matter. You could be on the 13 minute. You can make it work, right? You just have to zoom out and understand the bigger swings and make a system for it. And this is why, the pip rule as well, although it's super, super useful, it doesn't massively matter if, excuse me, one of you has slightly more tighter pip rules than someone else, because as long as, well, obviously using more time frame analysis, or just like I said, zooming out and having a good understanding of then how to interpret the internal structure, it doesn't massively matter then, because either way, I don't know how else to describe it, but like there'll be some more examples that probably make it a bit clearer of what I'm trying to get at. But as long as you have that reading, then you can you can start to trade in line a bit more with the market and kind of going with that order flow as it's going on. But anyway, let's just crack on with it, because I'm probably going to lead to unnecessary confusion with that. And I can see, right, so we came into that level of demand, right, with that recent sort of smaller internal structure, and we've continued up. So it's just in those scenarios maybe where you want to be a bit more patient and wait for some extra things. So then we come into the extreme here. So yes, this is a strong M15 swing high, and yes, we would expect it to hold until it doesn't, and yes, this can be a high probability area to look for shorts to continue down. But with all the confidence we say, I'm not going to go over it. You can understand why maybe you want to wait for a bit more, especially with the amount of momentum we've come into it. So in terms of an internal break of structure, I'd want to see that logo, and in terms of a chock, it's quite far away. So this is just going to be down to you whether you want to wait for that kind of confidence to go or not. But it's about understanding why in this scenario it's very likely that this movement into here, it's just going to be that pullback to then continue higher potentially and switch bullish, and then why this on paper could sound like a very, very high probability level to get short. It's the extreme M15. It's in line with the M15 swing trend. It's in line with the 4 hour trend after coming off 4 hour supply, right? But we understand, looking at the structure, is this as high probability as other scenarios in which you could list that same confluence in terms of what I just went through, in terms of it being the extreme pro trend, blah, blah, blah. No, right? And that's what I mean about getting that experience in, and not just trading every M1 chock that happens at an extreme M15 POI, because they are not all the same. So as mechanical and systematic as we can be, this is why I say in the course, right? We want to do that, but you need that 30%, kind of that, between 30 to 20% of discretion to if you really want to bring your trading to the next level, rather than just going, okay, M15 POI, chock, pro trend, let me get in short and let me target the low, right? It's obviously, trading's not as simple as that, okay? Cool. So then we switch bullish on the M15, and it's not even about taking losses in here. It's more about understanding why, right? Understanding why potentially it wasn't as high probability as other ones, and then not being blindsided and surprised as to when this happens and getting frustrated of like, M15 strong highs have to hold. No, nothing has to happen. It's just a framework that we use, right? But if we bring in all the pieces of the puzzle together, you guys get what I'm trying to get at, right? So anything like this, like POIs here, they might provide reaction points, but anything like this, we just, there's liquidity now for future higher prices, right? We don't really want to be shorting from these. You can do if you're more aggressive, if you get the right confirmations, etc., but we're expecting this high to now get smashed. So let's see what happens next. Let's bring this forward a little bit. to another sort of more interesting bit of price action. Okay, so here. So for me, that wouldn't be, especially with relative to recent price action, that's not really an M15 swing pullback. So I'm going to change this to orange, prefer the orange. Don't know why. Anyway, so what do we have? Well, we have a bearish chalk. Okay, we can all see that. That's mechanical. There's no if, buts, or maybes about that. It either is or it isn't. Now, in terms of swing structure, right, some people would classify that as a swing pullback, a bit more aggressive and tighter with the mapping. Again, absolutely fine if you do that. For me, I don't, but I would classify that as an IBOS. And this is what I was trying to make the point of earlier. It doesn't really massively matter what pit bulls you have if it's different from trader to trader, because if you have an understanding of internal structure now, like hopefully we will after this, right, then you can use this to trade in line with the internal structure. And then if the internal structure then switches bullish, well, that person who maps swing structure as tight as this, then you're both aligned. But you can, I think you guys kind of get where I'm getting at. Anyway, so this would be the swing low would always, it's the lowest point that took out the swing high, right, on the M15. So we've got quite a big range to work with. And this is why when you get those big, massive ranges, is what I was trying to talk about in the theory video before, when we were going through those annotations, right? This is where really having that understanding of internal structure really comes into play, because this is where price action can get a little bit more complex. Now, one thing I will do, and this is where the benefit of hindsight comes in now, is when I was looking at this live, I only mapped the refined single candle pivot zone. But obviously now with the benefit of hindsight, it would have been a bit more better to just, especially when the two candle pivots so near, just to refine it to there and be aware that we're within here, right? And that can give a little bit more confidence as to why potentially we could have a decent pullback from here. We get that M15 sweep of liquidity, reasonably V-shaped, chalk, etc. But if we get that IBOS, then we're really online for that pullback. And then when we see the bullish boss, right, then we can assume that this is then the week high. Why? Because the bearish internal trend is now over. So now when we get that bullish IBOS, we now assume that bullish IBOS will continue until it takes out that high. If it fails to take out that high and we get the bearish IBOS, then we assume what? We assume that bearish internal trend will continue and until it takes out that week low where the start of that previous internal trend continued, right? That's that sort of overriding simple framework we're trying to use. But obviously it can get a little bit more complex with that when you have internal trends within that orange internal trend and when you combine it with all of the other confluence that we're looking at. Cool. So we're coming to our 4-hour supply. We've had what can, be good confidence for a swing pullback, liquidation, mitigation, V-shaped reaction, chalk. Let's see if we can get that IBOS just to give us a bit more confidence, because remember, a chalk could just be to pull back to that internal low, right? And then you could get a bullish chalk like that, and then we'd be expecting that high to go, and you wouldn't really want to be shorting from here. Okay, and that's why IBOS can give you just that much stronger confidence than just a chalk. So let's see what happens. Okay, so we start to sell off. All right, I'm not going to draw on all loads of demand stuff. All right, and then we have this level here, right? So at this point, I would be viewing that as that one internal leg. Okay, so now we're within this orange level here. So let's see what happens. Do we get a bearish chalk? Yes, we do. Okay, so now you could say the where are we? M15 chalk. So now how could we interpret this? Well, remember, where are we within swing structure? This is the M15 swing high. We've now had a sizable pullback, so I can definitely say that that is my M15 swing high. All right, so we would be expecting a swing pullback, right? But what is that swing pullback likely going to be made of? That M15 swing pullback is likely, get my orange thing, going to be made up of an internal trend, right? When that internal trend changes, so not just a little chalk, because that, remember what that little chalk could be here. Yes, that could be the signal of the M15 high low, but we know that it could just be to pull back into that strong orange internal high to then continue. It's only when, to continue like that, but it's only when we get the bullish IBOS that then we have a lot more confirmation the M15 high low is in place, and then we can follow the M15 internal structure, assuming that will continue until we go up, right? But within those orange lines, what can happen, right? Even this is all on one time frame, especially when you get these larger swings. You can get, say like this orange pullback here, you can get green structure, right? And it's only when that green low goes that now we know we're ready for this movement and we can continue down. Likewise, right? We can get green movement up here, but it's only when we get the bearish IBOS on the green structure, if it's visible, right? Then we know that low is going to go. Right? It's kind of the same way we view multi-time frame structure, but we're just viewing it That's the fractal nature of price action all on one time frame, which is easier to see right when we get these bigger swings, of course, like this. All right. Okay, so yeah, orange. Let's get orange out just so you can kind of see what I'm looking at. That would be the level I'd be looking at for the IBOS I would want to see to go. So now we had that chock, we've pulled back up into this level here. Can we look for shorts? Yes, we can. Okay, now it comes into, well, after we get that chock right, we then look for the short to try and take out this low. I know I'm doing this a little bit quick, but I'm trying to speed it up. And then we get another movement down. Now this is what I was saying, I think I probably should have drawn this first, where we know we're looking for, sorry, I want to get the colors right because it will help. Thanks for your patience. We get the orange pullback and now we're looking for that move, right? But then green, this is so pedantic, but there we go. Within that, all right, we can have a bit of green structure. So get this down movement, this up movement, and then this down movement, all right? So now you can see how we've come down, we've tried to take out the low, we failed to do so, and we're retracing quite aggressively. So this is where before maybe if you want, our understanding wasn't as good. This is where I would be a bit, scratching my head and be like, well, we've had a pretty good attempt at doing it. We're retracing quite aggressively. Does that now mean this high is weak? What if we get a chock? Does that mean this high is weak? But if you kind of view that as the internal structure, right, and then you get a boss there, and you get a candle closure above, with the supply chain then filling as well, then I'd have a bit more confidence that this high is going to go right, and then we can look for that. But that could then get a bearish IBOS again, and then that can still be the orange trend being intact, right? I'll just get rid of this. Because even if this happens on the green and we take out this high, what's happened with the orange? It's still that. So you can see how you get the structure within the structure, but it can just help you to kind of stay out of some potential losses. So you can look for obviously a trade from within here, but if we get a closure above that, then that's likely that high may potentially become weak. And then we go, okay? So that one's, it's not quite crystal clear, that one, for me, but yeah, it is there. So at this point, this is where it could get a bit confusing, right? Because you could go, okay, well, is that the internal structure? And now we're looking for the long from here and we're going up. But because this is one internal leg, right, that can be one pullback. It still hasn't been broken and then we're going. And the largest swing is going to take over the smaller swings, right? And this is what I mean by some complex scenarios where it can get a little bit tricky and then we end up smashing out those equal lows there, right? And again, we get that pullback. So this would be your next bit of internal structure. I mean, obviously, I'm not adding in all of our analysis and confluence here. Like we've got these supply and demand flips, right? Ranges that we'll be looking at, price coming in, right? You guys can all add this, but I'm just trying to really concentrate just purely kind of more from a structural perspective, okay? So then we get a break and closure below here. So, we look at those bigger swings, right? The orange swing, what do we have, right? So now if we can get that break here, that could be the end of that M15 swing pullback, and now we'd assume those bullish trends will continue until we take out the week high. All right, so that would be your chock level. Cool. There's your chocks, there's your first signs. This way you could get to look in, but really I'd want to see this go before I'd have confidence. And then do we get a break above it or not? Yeah, once we get that break there, now what can we assume? We can assume that bearish internal trend has now finished, right? And now we're going to hold and take out the start of that. The caveat to that, right, is, and this is where, you need to use a little bit of nuance and discretion here, is potentially, this is a bit too of a small pullback and it could just be this, right? And what I've marked out is actually, and this is where you kind of have to just be aware of it in the back of your mind, that I could have mapped too small of a structure here in the internal, and it could just be doing that, right, to then continue that larger orange structure. Okay, so I hope you can see that, like down movement, big up movement, down movement. It could be a big up movement. That could be a protected internal high, right? But it also could have been this one where I switched bullish there. So that's where then you have to, look at it as potentially green structure. And I'd be happy to get long and I'd be happy to trade these structures here. But then I'll be aware of this high that as we come in here, if we then got that, then I'm like, okay, maybe that is the bigger structure then. And now we're ready to go. So this is why it's a bit more advanced and you've got to kind of read between the lines a little bit. You can use sometimes different timeframes as well to help you. Like if you go on the M30, you can see that larger swing of what I'm talking about. But that doesn't mean that you can't start to look to take longs. And that's where you're gonna have to bring in extra confidence. Like now we've had a pretty sizable pullback potentially to the EQ. We've come into this significant flip range that broke the prior structure. Like, if we draw on premium discount, I don't know if we got to the low or not. Like, yeah, bang on the EQ. So that's the type of things where, if I was going to short from this high, because that could be that movement, because we've already had the steep pullback, it's very different from this coming here because we haven't had that sizable pullback yet. But now when we've come in deeper, we've swept liquidity, we've come into a flip range, we come into the EQ, it's a lot higher probability that the swing structure is going to take control now. Okay, so that means the point I'm trying to say is this could still be true and you can still short from here, right? So then look for that movement there. But maybe you want to see a lot more confidence. Maybe you want to see this small internal structure here that we're mapping, right? You want to see this get that bearish IBOS from here, right? Rather than just an M1 chock from that high. And then you see that recent internal order flow shift. And now you can have a bit more confidence that we're going to take out that low. Hopefully I haven't lost you there. But yeah, this is why it's a little bit more advanced. And I haven't quite decided where I was going to place this all in the course. But I think I'm going to make maybe just a whole separate advanced module for what we're going through here with internal structure, because I think this would be too overwhelming, right, if you're going through this for the first time in the course. Anyway, that's for me to figure out. And this is what I was saying about that high, right? Again, you could look for some shorts from this high, but this is where maybe you want to see a bit more like convincing break of that internal structure, and then we could go in. So this is the other aspect of what I've kind of been trying to make clear as well, is if you have this understanding, we've pulled back to the EQ, potentially that swing high lows in place, now getting that internal structure being bullish, this is where it can make more sense, and we're trying to talk about this a bit in the meetup, to take what on paper may sound too aggressive of a trade, i.e. buying up here, because we're right in the premium, we're almost against these extreme supply levels, especially after we then have that sweep of the M15 high, so we haven't quite closed above. But if you can read what's going on in the lower timeframes, right, and you like what you're seeing with this bullish order flow, and then price comes into here, although this could be an external range liquidity sweep and we could switch bearish, until that happens, until we get that bearish IBOS, maybe you're happy to take the long within here, right? But now you have a framework of understanding, well, whilst this order flow is bullish, this internal structure is bullish, I'm happy to be, quote unquote aggressive and get that long within here, because it's likely price has now done its job. And if I'm wrong and I get in long here and I take a loss and then we switch bearish, okay, happy days. Now we have that internal structure, and now we can assume that that's going to hold until we take out that low, right? So that's kind of the framework in which you can use, and it can just give you confidence for those longs here, right? You see, boom, come into that demand, and then we are off to the races. But also what can help you, it's not just concepts on their own, right? It's about where we're coming off the monthly level, big liquidation, big V-shaped reaction, potentially expecting, that daily pullback, et cetera, et cetera, et cetera. It's about adding all of those pieces to the puzzle together. So let's play this forward a little bit and try and get some more interesting areas, try and get up to around current price action in time. So here, that for me would be a sizable swing pullback, okay? So that would be the swing low, of course, right? So bearish chock level would be here. Let me zoom in. Right. Now, in terms of internal structure, sometimes it can get a little bit confusing. Do you want to look at these little swings here? Do you want to look at, like, for me, that would be the more significant internal structure. That would be a leg up like that. Again, this is where you can use your timeframes if you want, like go on a 30-minute, right? You can see a bit more of a pullback. And then that for me would be more like 5-minute structure, okay? So you can use them both, to your advantage and knowledge. Now, we pull back, right? We get the chock. We do get an internal breaker structure, right? Whether you classified it as that little pullback or you were looking at the slightly bigger swing, which is, right? And then we get that break there. So that would be your swing, right? Your internal swing, and that would be your IBOS there. So let's map it out. All right. Cool. So this one for me is actually really tricky because we want to get the pro trend longs. There's no real clear unmitigated demand other than this wick. Like these are all already mitigated. Like that zone there's already had a movement away. You can see price came back into it. Again, price came back into that next one. So for me, there's nothing really too clear unmitigated. I know there's a little bit of a wick here, but it wasn't that great. So I was like, okay, well, let's at least wait for a bullish chock, right? And then, my thinking was in the live market, either I want to see price come into here and then we can look for our entry model, or wait for a chock, whatever you want to wait for, like an M15 chock. Or at this point, I don't really see anything too clear within here. We could easily just be doing this and continuing lower. So I wanted to see a chock first and then try and get that movement here. But as we can see, it kind of just chopped around. It never took that low, which then means we got the chock here, but then it just flew off. So for me, there wasn't really a way that made sense for me to want to get in. I know some people were looking at, eye chocks within here and stuff. Or technically that was the one over there and getting in. But yeah, for me, it doesn't really make too much sense. And then we had some unexpected news from Lagarde doing her thing, ECB president. And then it shot up. So now the new swing low becomes here. And then let's fast forward it to a bit more interesting price action. See what we get on. So that's just another sort of pro trend swing pullback, right? A lot of momentum upside, and then we get another break of structure. Okay, so this being the new swing low, cool beans. And then let's see what happens next. Okay, so did we break and close? No, so we failed to break up above that high. Let's bring this forward a bit to nearer London. Okay, so we almost have a sweep of this high. Let's quickly check where we are in the old higher time frames. And I'm rushing through this a little bit, but okay, so yeah, we have this kind of 4-hour supply. It's already mitigated. So, oh yeah, we came off this wick. So I wasn't actually expecting this to give much of a reaction, but we have to know, right, we've had that 4-hour break of structure. The daily is bearish. Where are we? Haven't quite come up into the prior daily range yet, but after a 4-hour break of structure, what do we expect? We expect the 4-hour pullback. So we have to be aware that that could potentially start to happen. That would be the 4-hour choke line there as well. So let's see. So we failed to take out that high, ends up being a sweep. We then have the M15 shock here, which is pretty much a decent internal break of structure as well. But we could assume that the M15 bullish trend may continue until it doesn't. We have this extreme sweep zone as well, right? Swept liquidity below those lows. Okay, so as price is coming in on its own, you could say, okay, this is a pretty high probable area to look for longs. But what you may want to wait for is at least a bullish M15 change of character, right? This is a similar scenario to a few we've already gone through in these walkthroughs, where yes, you can take longs from in here. I'm not saying you can't, but it's just about understanding that. Or ideally what we'd like to see is if we can get in on the M1, imagine this green line is the M1, right? We get our nice picture perfect entry model and we get in long now, and then price pulls up to this supply, right? Clearly the recent order flow is bearish. Then we can remove our risk. Whereas what happens a lot is price does this, maybe it comes in, it gives an M1 shock, it doesn't tag you in, it goes into supply, and then you're looking at, okay, well, if I look at my trade plan, it's pro M15 trend from the extreme, had an M1 shock, okay, why am I getting losses from the extreme? Well, it's because look at the order flow, just wait for order flow to shift on your side, wait for that to happen. And that you don't have to, but these are the scenarios in which you may want to do it, right? You can see we just come into supply, then we chop around. So just quickly draw on, supply holds. We never get that bullish change of character, right? You would have wanted to wait. Then we take out this low here. So for there to be a bullish chock, it would have need to have been that high there, which again, we don't get. So even if you had to wait for that, been a little bit more patient, maybe that was a sweep, then you could get a little aggressive chock here, and then you could get in. At least that would be a bit better. But what would be even better than that would be waiting for that high to go, right? Really getting that IBOS, because once we get that IBOS, right, this internal trend, or even if you include that, right, would then be over, and now we can start to target these highs here and assume that that bullish internal trend is going to go. Okay, and then if some of you really want to be aggressive, right, you could take the short from within here if you wanted to do so, and then we get the bearish break of structure, and this is where you may want to follow the literally just keep following the internal structure until it shifts, right? And this is a bit more aggressive, it's doable. The one thing I'll say about this though is what do we expect after a break of structure? We expect a swing pullback. So if you are going to short these, it's doable, but backtest it, because you have to expect at any point that swing pullback can kick in, right? So sometimes this will work out really well, momentum strong and the higher time frames are really overextended or coming off a great higher time frame level. Other times you'll do this and you'll get burnt a lot, okay? So proceed with caution is all I'll say. You can see here, right, it works out really well. Tap into the range, go. Tap into the range, go. Right, so it does work out, but other times you'll get burned. So please don't just start doing this like on your main live account. Test these concepts like anything. But I just want to stress that importance. Okay. And then, we're coming into 4-hour levels, blah, blah, blah. I don't want to spend ages kind of going through all the analysis. I really kind of just want to, like I keep saying, focus on how we can interpret structures. So this would be the M15 swing high at this point still, because we haven't had a swing pullback, and that's the highest point that caused the last swing boss. Here we do get an M15 change of character. And this is what I mean, right? Change of characters are the most aggressive form of structure. We want to pay attention to them in the right areas. We're not really coming off, what are we coming off here? Actually, to be fair, I think that was 4-hour demand. No, this is the problem with backtesting, because training view jumps ahead a little bit, but let's double check. Let's draw on. Yeah, so to be fair, there was a 4-hour level here. That doesn't form very well. Obviously, no super liquidity, and it leaves equal lows. We get a little bit of a bullish shock, but it's during a London lull, which is another thing, right? That's not an ideal confluence. And then we can continue down. But what we'd want to see, right, for that better confluence, even if you view this as that little internal structure, is you want to see that candle closure. It can be a lot more significant. And then we can look for those movements, right? So then we can continue down. Again, there might be even, is there another bullish truck in there? No, there isn't. Continue down. Is there a bullish truck here? It's the inside bar. Do we take it? No, not yet. Okay. Now, if I was looking at this, okay, we might get a bullish truck and you could get involved, but I would want to see really, that for me would be one movement. That's the bullish IBOS I want to see. Now, when that goes, what would we look for? We look for that trend to continue, whatever level of supply we want to look for it to go. We may get a bearish chock. Going to keep going over this, right? And that's a good sign to get in short, but we have to be aware that that bearish chock may have happened just for the green internal structure to come back into that higher low, right? And then we get a bullish chock, then we can assume that high is weak. It's only once we get the bearish IBOS, so this one here, that now we can say, okay, this leg has failed to take out the swing high, so now this leg is weak, and now we assume that that bearish internal structure will continue until we take out that low, right? But obviously within that, we can get internal structure within it, okay? So let's take a look at how maybe this forms. And then we'll wrap it up, because we've only got 2 days, I think, left of price action. Okay, so we get a bullish chock, so you're well within your rights to look for longs within here, right? But now you see how we get that kind of much more convincing internal break of structure, especially with the way in which it happens, big V shape, swept liquidity below that prior old swing low. M15 IBOS, cool. So now you can be looking for this to happen, like I just said, right? We can now look for that internal trend, okay? And you can also look for shorts from any unmitigated supply zones, but you have to realize if you're getting a short from something like this isn't going to necessarily be the move that's going to do that. Okay, because this is probably just going to maybe provide a reaction to come into here, or maybe this unmitigated inside bar here, right, and then continue. Because now the internal structure is bullish. It's only when the internal structure realigns with the swing structure that's when you can then start targeting those bigger moves, right? So now we come in, we pull back, right? So come in, bullish chock. So now we know we can target that high, right? And that's the larger swing. And we're continuing up. So let's see if we get an IBOS here or not. And then we eventually get it, right? And exact same thing. Old supply zones can potentially provide reaction points. I mean, that one already had a mitigation, so it wasn't great. Just to come into where? To come into this level, to then continue up higher. I think you guys can see that. So let's play this forward a little bit. Okay, now, this is where it can get a little bit tricky, and I got a little bit caught out with this, right? And this is where you need to kind of read those slightly larger swings and the slightly smaller swings at the same time. And this is where price gets very, very fractal. And this is what happens when you have these real big swings, right? Because this is the M15 swing structure. And this is what I was really trying to drive home in those theory lessons that we did over here, right? Where you can get, the orange structure, then the green structure, and then you could have, let's say, purple structure within there, literally all on one time frame. Okay, so what do I mean by that? Well, if we look, let's use orange for the slightly larger swings. Okay, so let's say we have, we call this that bullish breaker structure, and then we have this movement here, right? Now, is that the breaker structure? And you'll see what I mean if I play fast forward a little bit more, because we get a change of character here. I will explain this a bit better in a minute. Just give me a second. So we get our bearish change of character. Now you could see that, well, the IBOS, right, would be because you have this movement here, and then that's where it closes. So that would be the IBOS of that structure if you're mapping it that way, right? So we'd want to see that go, really, okay? But we also have to be aware that there's kind of a bigger swing in here, right? When you look at this, that, and then that, okay? And this is where it can get a little bit complex. And sometimes jumping up a time frame can help. Like if you look at the 30-minute, right, you can see how that's basically just one leg. Okay. So when we get this breaker structure here, or change of character, I should say, and then we get this IBOS, right? This is where, it's tricky, because you could say, well, now this trend here has changed to bearish, right? So now what do we assume? We assume that this leg is now done, right? That bullish trend has failed because now it's bearish. So now this leg, or so I should say this low has failed to take out the high. So now we expect what? We would expect that to continue bearish until we take out that low. And whilst that is true, and whilst that is a framework I would use, when structure can be a bit more complex, you have to be aware that maybe, if I use a different color, green, this is the bigger structure now, that maybe this is that one leg, right? And that is just doing this. So you have to be aware of that in the back of your mind. So if price is coming up to these levels, you may want to think, well, actually, that could be weak. So yes, I could short from here in case the orange structure, right, is what's right, because that could then be good. But the point is, if you're not sure, because you can see the other bigger structure as well, then this is what I'm saying. It's not that you can't trade from here, but maybe you want to wait for a bit more confidence, and you want to wait for a bit more of a structure shift, like a clear M1 swing boss rather than just an M1 chalk, or like an M5 chalk, because that would be like an M1 boss. These are the starts to be how you can get a bit more advanced and think about those things. I'm going to leave it up to you and how you want to do that, but it's just about introducing that into trading and not being surprised at, okay, I've got an M15 zone here, I'm just going to jump in the first M1 trade, and why is it not working out sometimes, right? And this is where it can get a bit more advanced. So as then we then come down into this level, and then we're thinking, okay, potentially this is one leg, and we're coming down here, we've now had a bullish chalk. Okay, I want to look at this level here, but I'm going to wait for a lot more confidence because, I can see this as being a weak internal high of that larger structure. So yeah. And this is what I mean, right? So it looks like there definitely wouldn't have been anything there on the M1 anyway, and it was London low. But yeah, you can see now, right, we've got that bigger movement, or whether you want to call it from here, and we've got that. And then within that, you can see how there's a smaller movement, right? Because you have now this internal structure. So let's say price was to come down and give us that bearish boss. That doesn't necessarily mean that this low is now going to go, because it's only when you get this orange break in, that low will go, right? Because then that movement has failed. I appreciate this gets a bit confusing, but let's play it forward and I'll try and show you what I mean. So we've had that larger IBOS here. We're coming up into some extreme levels now, right? So we can look for those pro trend shorts up here, but ideally we want to wait for M15 internal structure to switch on our side. So let's see what happens. So we pull back, right? And this is what I mean, right? We have this smaller structure, but if that low broke, I wouldn't necessarily think this low is going to go, because we have this larger movement, and it could just be to do that, right? So let's see what happens, and then we go. So I know some people were looking at, right, this, we've had a bearish M15 chalk, we look left, what we've come off, nothing really that great anyway, and you're thinking, right, it's pro trend, we've had an M15 bearish chalk, therefore we should be taking out the swing low. Well, no, because look at the internal structure. Whether you map it tight and you're looking at that, you can see that one's pretty obvious, or even if you have the bigger swing, right? That's why this is a weak internal high. It's not high probability. Maybe you want to short from it because it could play out, but this is where you may want to wait for a lot more confluence in that area, right? And then we have another bullish IBOS here. And don't forget, this whole time you could be looking for longs if you want to keep trading this, right? These are the types of way in which you may want to bring it into your trading. Again, from here, a bit aggressive, but you could look to, I'm not saying you should, I'm just saying these are things to have in your mind. You could either look to long from here, or if you want to short, you want to wait for that to break. But even if that low goes here and we get a bearish IBOS, you have to be aware that if you look at the bigger structure, so we have, so let's draw it on, right? We have like that green structure, but then what do we have? We have the orange structure. We have that larger swing in price. So we could break that level, but just to mitigate this level here and then continue up. But then we've had that bearish green IBOS, so then you may want to short from here. But do you know what I mean? That's where you want to wait for more confluence. It can get very, very tricky. So let's see what happens next. I don't think we even get a break and close below there, do we? So that would tell me that this high is weak, right? Because we are still bullish on both the small structure and the larger structure in terms of the internal. So that would not be a high I would want to short from. And then it gets broken, right? Then we come into, not quite, into the refined pivot. We get a bearish chalk. I think this is, daily roller close anyway, so we won't be looking to trade and we'll be ignoring those candles. But you can see here, right? Just looking whoops, at the internal structure, it just saves you from all of this, right? Just waiting for it to shift in your favor. So let's bring it forward to London the next day. And we have then switched bullish on the larger swing trade, and then that stays as our swing low. So you can see it was quite tricky in here, especially, like I've kind of viewed it as that way, and then that being bearish, but then you can see actually that's also one leg as well. And this is where using different timeframes can help you a little bit. If you look at like the M30 or potentially even the 1H, and you can see that could be a bit of that. And that's where you may want to just be a bit more cautious with trading from within here. So then at that point we are bullish and we can look to potentially play the pullback. So what's the bare minimum most of us would usually wait for is for the M15 chock. But in terms of internal structure, even if you map it tight, that is definitely just one movement up. So I'd really want to be seeing that logo from an internal structure perspective. So this is the last day. We're almost there, guys. Well done if you've made it this far. Okay, so we have a bearish chock, right? So again, if you were trying to buy up here after an M15 boss, what do we expect? We expect an M15 swing pullback. So yes, maybe you could get a trade within here, but it's a lot lower probability. We have all of this liquidity built. You don't want to be buying from here. Or if you do buy from here, this is what I was saying, wait for that bullish eye chock, wait for that internal recent supply to fail, right? Wait for that to get involved. Or as soon as price comes in here on the M1 or whatever you use, right, you want to be getting in straight away. And then once price gets into this supply, then you've removed your risk because it's likely that's going to continue. Whereas if you see the M1 chock, then it goes up into here, and then you're trying to buy now after the mitigation, right? Nah, you can see, don't be doing that, okay? Cool. So now we've had the M15 chock. Maybe you want to play that internal pullback into here to then there. So now it's a lot safer to now look for shorts, right? You've got the supply chain, you've got the fractal structure on your side. There's nothing really here that I'd be that bothered about, right? That candle formed during spread hours, so usually ignore these candles anyway. They don't tend to provide much of a reaction because it's kind of like a fake candle. As the spreads blow out, and then you could look for that trade. And then we end up switching bearish. So even if you were looking to buy from this internal low, do you want to jump in on the first M1 change of character? Like considering all the other confidence where we are, but everything below, no, especially the way we're selling off, right? So you would just wait for a clearer movement, wait for at least an M15 chock, right? We don't want to be buying from up here. And then we start to sell off, but cool. Let's play fast forward a little bit. Voice throat's starting to go. And this is another thing about what I mean, right? Let's say you wanted to short from here, right? What do we expect after an internal break of structure? We expect that internal pullback. This is not well priced, right? And that's where you don't want to be kind of being as aggressive at that point. Now, so this pretty much brings us to kind of where we are. So let's think about this. So we've had a bearish internal break of structure, but we're bullish on the swing structure. So, let's keep it simple. Let's look at the bigger swings. What do we expect? If you ever get confused, we know this is our swing low, this is our swing high. We're expecting what? We're expecting a swing pullback to then continue to take out that high. But if we're mapping the internal structure, what do we look at? Well, we look at that bearish internal trend. And then once that internal trend finishes, right, we may come into a nice level of demand and we may get a bullish M15 chock. What does that M15 chock signal? It could signal that the high low is in and we're about to go, but we know that it could just be to come into this level here, this protected and strong internal lower high. So then if we come in and then we get that bearish chock, right, now we can then look to target that low there. It's only once we get the bullish IBOS that we can say with much stronger conviction that now we're ready to take out the start of that bearish trend, the start of that leg, the weak swing high, because now the larger internal structure is aligned with the bullish swing structure. And now we can keep buying until we take out that high, right? And that's what we're trying to do. Sometimes we can get lost, we can get really lost in here when it gets a bit more complex. And if you do get lost, like I was saying, delete everything, remap where your swing structure is, know what you're trying to look for overall, and focus on the bigger swings. That way you're not gonna get as wrong if it starts to get really complex, okay? Like for now, we've had that bearish IBOS. We can say we haven't potentially pulled back into maybe the more discounted demand. So what we could potentially expect is that this will be that protected internal lower high, because it's a weak swing high, but it's a strong / protected, whatever you want to call it, internal lower high, right? So now we could be coming in to then do that, okay? But we also have to bear in mind that, swing structure is stronger. There could be a high low. We've had a bullish chock. You can see within that larger orange structure, what do we have? We have this, okay? So let's say we get short from this M15 supply, anticipating that next orange leg, right? Let's say we get in on the M1, we have to be aware that as price comes down into this green low, right? That could happen. And we could continue up higher. And then maybe we switch bearish, right? And then we go. So these are all the things where it can get a bit more complex. And you don't necessarily want to be trading in, like if price comes into here and then you're trying to short, you already want to be in the short if you're going to trade that movement, right? So let's play fast forward to where we are. So we got that little green IBOS, with that green structure I was drawing. Let's make that say green. This is the end, guys. We have made it, don't you worry. And then this would be like that larger IBOS I'd want to see. Okay, so at this point, this is, let's see where we are. We're at the end of the week. So this is where it's pretty messy, pretty horrible, to be honest with you. And I wouldn't necessarily trade any of this with high conviction, but if we use that internal framework, like I said, let's redraw it one last time, and then that will be officially the end. So we've had the M15 break of swing structure. This is our swing low, this is our swing high. We're expecting that swing pullback to then potentially get another swing high. Let's ignore the 4 hour and the daily and everything else, just purely M15, right? That's the basic premise in which we use for swing structure. We should all be very, very comfortable with that. Now, we look at the larger internal swing structure. That was that large pullback and one push up, and then we had a bearish IBOS. So now we switch bearish to what we assume to facilitate that overall swing pullback. And then when that switches bullish, then we can say the large internal structure is aligned with swing structure. It's much more likely the high lows in place, and we can follow the bullish structure until we take out the weak high. Okay, so that's the larger internal structure that we're trying to trade. Now within that, I can get my little green line out. What do we have? We can say that we have this. I mean, even if that was just one straight push down, right? This is a point I might get a question about. I would still view this, even if that is, I would still start to look at the internal structure, right? Some people call it substructure. This is what I would be looking at. I would still classify this as an internal boss, even if that was one straight push down, right? I'm just reading between the lines in here, okay? So remember, we're looking at the larger orange move, but then we formed this little structure here. So at this point, I would have been just conscious that potentially that could happen before we get that next orange leg. But in this case, we did break it. We did switch bearish. So now this green internal structure is now aligned with what? It's aligned with that larger orange structure. So now technically, this could just be coming back into here, right? We've had higher high, higher low, higher high, lower low, and this could be the movement to form that green lower high to now make that next orange leg. Hopefully I haven't lost you there. All right, so that's basically what we're looking for, potentially. Who knows? It's a bit of a mess overall, really, so I'm not going to read too much into it just yet. But that's the framework we use. So yeah, hopefully some of you aren't too lost and confused. If you are, don't worry, right? This is not, do you know what I would say? This is not necessary in order to be profitable. This is just how we can, like I keep saying, bring things to that next level if we were advanced and we want to get there. And this is going to tie perfectly into the next topic we're going to tackle, which is order flow. So literally going to view the market the exact same way, except we're going to spend a bit more time basically in how we view the exact same concept, but with supply and demand ranges and drawing on. And it may help to some of you, it can make it a lot simpler because you can really visually see what's going on. Others of you, it might get a little bit confusing, especially when we get very complex ranges like this, okay? So yeah, take time to digest this. Don't just smash through it all on 2x speed. Watch it again and again and again. And as always, it will really sink in when you practice it and apply it to your charts and forward test it day by day. And hopefully we can all grow as a community together. Yeah, and really continue to kind of, push our trading to that next level. So order flow will be what we'll tackle next, and yeah, we'll go from there. So love to hear your feedback and thoughts on this, guys, and as always, any questions, feel free to pop them in the Discord or below the video. Cheers, guys.